You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Tuesday, 24th day of July, 2018. So glad you joined us today. Something sounds different. If it sounds different to you, type it in the chat box. If it sounds the same or okay or reasonably all right, then type nothing in the chat box. I will leave that entirely up to you. It may just be my headset. I think I have the volume in my headset turned way up. Gary, you hear nothing at all? Gary. Oh, Don says it's good. Okay. All right. Well, thanks. Yeah, it's just, okay. Thanks, Gary. Yeah, it's just, I think I was doing something and got the volume in my headphones turned up, so I'll fiddle with that later. Welcome to the show. So glad to have you with us. If you're new, special welcome to you. If you're returning, welcome back. Always glad to see you. I've got a chart up of the S&P 500 Emini Futures. If you cannot see it, just go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions, and you'll be registered in about 30 seconds. That carries you through the end of the month. First of the month, you register again, but if you register on the first day of the month, then you get 30 days for 30 seconds, and that's a pretty good deal. We also dual stream at youtube.com/CFRN/live. So, yes, Wes, you're correct. It is all in my head. It is all in my head. But head. Well, that should be changing it. Oh well. I best not fiddle with it during the show. Alright. Good enough. Let's take a look here and see what's going on in the big wide world of the crypto. So everybody knows how to see the chart. I got the S&P 500 up. We had a big rally. These are, of course, last week's zones you're looking at. And if you have any questions, of course, type them into the chat box. We'll be happy to answer them. Dr. Tom Barrett is going to join us today at 1 p.m. Eastern, an hour from now. Before that, we should be talking with John, and of course, Michael will be in to give us a recap of everything that happened in the live training room today. Responding to increasing interest in cryptocurrencies from high net worth and institutional clients, a Hong Kong-based company is planning to launch a crypto custody service by the end of this year. Fusang Investment Office is an asset manager focused on Asian private family offices. Its Fusang Vault is expected to open for customers in the fourth quarter of this year, 2018. Digital assets are akin to bearer bonds, whereby whoever is holding the security is presumed to be the owner, and there is no registration of ownership information of the security. Hence, the way we keep digital assets secured is of paramount importance. Now, that comment came from the CEO, Henry Chong. Bearer bonds, if you've ever seen a Bond movie or any other spy thriller, they're always out to steal the bearer bonds. Bearer bond means that the face value, whatever that might be, I suppose, is payable upon demand by the bearer, and the bearer is whoever happens to be holding them at the time. Chong did not provide more details about the Fusang Vault's services. However, he shared that Fusang Investment is already working with insurers to provide cybersecurity insurance coverage for future clients' digital assets. SCMP's report also notes that cryptocurrency trading is attracting more and more financial institutions like hedge funds and asset managing firms. This leads to an increasing number of over-the-counter transactions, creates the need for an alternative asset safekeeping option. I'm really curious how this is going to work out. Now, a bearer bond, it is a physical thing you hold in your hand, and so you would take it to a place such as this and say, I need you to lock this up in a safe and keep it, oh, I don't know, keep it safe. Fair enough. Cryptocurrency, can you hold it in your hand? Yeah, you actually can. I mean, if you put it onto an external drive, a digital wallet, something like the Nano S, which I have right here, if you put your crypto on the Nano S, would you then go and hand your Nano S to the folks running this vault, or would you transfer it to them online? Because if this high security vault what do they call it again? It's a crypto vault. I think they had a fancy name for it. A crypto custody service. Okay. So if this is going to be nothing more than a warehouse filled with Nano S type devices, you know, and a couple of mean guys with machine guns guarding both means of egress, anybody could duplicate that. Curious to find out just how they keep it safe. And when you, now again, if you put bearer bonds in a safe in Chicago and you happen to be in Hong Kong and you need your bonds, how does that work? However, if you're on the other side of the world and needed your crypto, we know how that works. This should be interesting, given what I'm about to share with you. Prominent hedge fund manager Michael Novogratz expects more financial institutions to be coming into the crypto space. That's probably a name you know, Michael Novogratz. A herd, he calls it, a herd. Could you hear the hoofbeats? A herd of institutional investors is headed towards cryptocurrencies, Novogratz said in a speech during the Blockchain Week Korea last week. In an interview with The Street, he added, "I think institutional investors are slowly coming to the realization that blockchain will be Internet or Web 3.0, and they'll want to participate just like they want to participate in the web." Novogratz, who earlier this year raised $250 million to launch Galaxy, a merchant bank trading cryptocurrencies, and invest in blockchain projects, also said that institutional investors will first participate through venture capital funds. Many of them are already participating because they've invested in Sequoia or Polychain or Benchmark or many of the other VC funds that invest in this area. He added, and according to the billionaire investor, the second step for these players will to buy coins or even acquire ICOs. So that's what the rich are up to. How about the rest of the world? Amid rising popularity of cryptocurrencies around the world, a new study reveals that about 30% of Brazilians are interested or intend to invest their money in cryptocurrency sometime in the near future. The survey carried out by cybersecurity firm Avast also found that more than 84% of the 1,900 people polled were aware of and familiar with cryptocurrencies. The results published by the local crypto outlet Portal do Bitcoin also show that 44% of the respondents agreed to websites using their computer power to mine cryptocurrencies in exchange for an ads-free surfing experience. Same time, more than 86% of those surveyed admitted they were concerned about their devices being infected with mining malware. Half of the rest believed they would not be affected because, well, they don't own any crypto. There you go. That's one way not to have to worry about it. A company building a platform to support crypto payments for fractional ownership of collectible car brands has decided to demonstrate what a startup could do when its initial coin offering did not attract as much capital as expected. Bitcar launched its ICO last year, hoping to raise $25 million at the start of 2018. Investors were offered to buy the Bitcar tokens that would allow them to pay for a share of a luxury vehicle. The firm wanted to buy the cars on their behalf with the intention to hold them for around 15 years until they appreciate enough to be sold for profit. It's like taking a historic car, a collectible car, and turning it into a timeshare. Basically, you own, 5%, 10%, 20%, and 15 years later, when it's sold, you get your share of the spoils. Now, the Australian startup, which was set up in Singapore, where regulations are more favorable, managed to collect $6.5 million during the pre-sale of its token and $3 million in the public sale later, bringing the total to 6.9 million US, or less than half of the initial target. One token was worth 10 cents at the time, but it's currently trading for less. The smaller amount of capital raised has forced Bitcar's team to reassess the situation. The startup has decided to essentially get rid of the excess tokens in hope of improving the scarcity of the ones already sold. Due to the similar raise, Bitcar has decided to burn unsold tokens from the ICO, thus reducing the circulating and total supply. The startup's founders also announced they plan to burn half of their allocated tokens. Interesting. Samsung. CoPay, or CopPay, a European crypto payment processor, announced last week that Samsung stores in the Baltic states will be accepting 7 cryptocurrencies through its payment gateways. Following the announcement, a Samsung spokesperson was quoted in some reports explaining that the corporation is not partnering with CopPay. The fintech firm denied the reports and provided in a new blog post its explanation about the situation after the original release was deleted. In the update, CopPay clarifies that it has offered its solution to the Baltic premium reseller of Samsung products, which is a separate entity. The company signed an agreement with the reseller, activated its payment gates in the stores, and even trained personnel there. CopPay CEO emphasized, "We've never claimed that we entered into partnership with Samsung HQ. We announced the possibility to buy Samsung's products with cryptocurrencies in the Baltic stores." Well, somebody got the cart before the horse, or so it seems. Unfortunately, after Samsung officially announced it doesn't have any plans for such, the reseller decided to suspend the cryptocurrency payment method. The company also says it has the evidence to prove its version of the chain of events and has uploaded a photo of a CopPay sticker with a sign saying "cryptocurrency accepted here" in what appears to be a Samsung branded store. Well, that should fall under the weird crypto news of the day. And out in the big world, we know Trump is threatening to pull security clearances. Hello? Did anyone else just hear that voice? I know, Wes, you think it's all in my head, but
I didn't hear anything.
I heard a lady's voice, clear as day. That is odd. Very odd. Okay, Michael is here, so he's going to give us a recap of what happened in the live training room. Let me run down these numbers real quick. Cash markets, the Dow is up 229 points, almost 1%. NASDAQ up 24 points. S&P 500 up 18. The Russell 2000 down almost 9. In the commodity basket, crude oil up $1.03, trading 68.92 last. Gold down 40 cents, trading 12.25.20 last. In Asian markets, green day there. The Nikkei closed up 113. The Shanghai was up 46, and the Hang Seng, wow, up 406, adding 1.5% at the close. And a green day in Europe as well, with the FTSE up 53. The DAX up 140, which is over 1%. The CAC up 55, which is over 1% for the CAC. And so there you have it, a green day in Asia, a green day in Europe, and with the exception of the Russell 2000, it would be a green day here. Again, the Dow up 229, NASDAQ up 24, S&P up 18, and the Russell down 9 points. And here's Michael to give you a recap of everything that happened today.
Alright, let's do that then. There we go. You should be looking at my monitor.
And I am.
Excellent. Excuse me. Okay, so here we go.
Let me hit mute. There you go.
Sure. Okay. Good afternoon, everyone. Today is Tuesday, the 24th day. Oops. The 24th day of July, 2018. Let's see. If you have not taken a free trial with us, go to the homepage here at CFRN.net, and right over here on the side where it says 5-day free trial, apply.cfrn.net, click on that, or you can scroll down a little bit more, click on this free 5-day trial, or this use our proprietary indicators free. Click on any one of those, and you will eventually be brought to this page. Okay, where all we ask for is your email, your first name, and how you found us. Hit that submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, we don't know you took the trial until you click that confirmation link. Okay. All right. Well, today we had a green day. We got back in the green again. As I said, today's the 24th day of July 2018. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today we made 20 ticks in the euro and 10 ticks in crude, and we lost 8 ticks on the ES. Okay, we had one stop out on the ES. I think that was our only stop out of the morning, wasn't it? Yeah, it was. We took one trade on the ES. Oh, 2 trades on the ES. One break even and one stop out. Anyway, we were plus 125 on the morning session. Today took 27 minutes and 5 trades to get to the goal for the day. At that point, we're up 103.75, and we took a total of 11 trade opportunities. So on the month now, we're at $14.91 and a quarter. That's over 16 days, averaging $93 per day. And on the year, we're up 20,770. That's over 133 days, averaging 156 per day. Okay, it's 133 days, $20,770. One contract, 2 hours a day, averaging 156 per day. Now, let's get into what happened or didn't happen. Gold, we had one opportunity right here. We ended up with a break even on it, and it eventually ran up, did what it should have done. The green line got up into the cycle, like it should have right there. And then it pulled back, and the cycle got all messed up. And we never got another trade opportunity during the morning session. During the break, nothing at all during the break. Okay, nothing at all during the break. On the euro, yeah, we had a few trades here on the euro. 1, 2, 3, 4, 5. Yep, that's right. All right, the first one on the euro, we were plus 2. The next one we made 4 to put us at plus 6. The next one we made 9 to put us at plus 15. Next one we made 1 to put us at plus 1. And the next one we made 4 more to put us at plus 20. I missed this one. I went and put the order on, but it went into profit before I got filled, so I had to take it off. And that was it. I mean, there were other trade types in here, the stuff that I'll be going over in the 1:15 meeting this afternoon, but nothing that set up with the trades that we do in the normal room. Speaking of that meeting this afternoon at 1:15, this is the link to it. Okay, that is the link. 1:15 p.m. DT. Okay. In crude oil, let's see what we did on crude. We had in the pre-market on crude, right here, there were a bunch of trade opportunities on this run up right here. Okay, and a few on this leg down. But on the run up here, there were about 3 or 4. The very first one was right in here. We got 1 tick profit on that. And the next one was right in here. We got 9 ticks profit on that. Okay, 9 ticks profit on that. Then we were waiting patiently while it got very choppy. It did give a bounce off the BBC right here. I know we're down below the BBC, but it gave an up close before the black step line crossed below. Okay, before the black step line crossed below. So there was a long opportunity there, and we ended up taking a break even on this one over here. This was a momentum long. we missed that one, and we're going to break even there. Now, let's see. During the break, there was a momentum short right there. Change of direction. And during the break, there was, I don't know that I would have done this because I would have been looking for lower lows here. I mean, we did have lower highs and lower lows, so we might have done it there. And that would have stopped you out if you did do it. Bounce off the BBC. And that was it for the morning session. Let's see, on the ES, we had just 2 trades. This one here that we stopped out on. This one that we missed. We tried to get into that, but we didn't get filled. And this one that we had to break even on. During the break, it looks like there was a bounce off the BBC right here. That might have been a break-even trade. Had to change the direction, and it's kind of given a long trade off the BBC right here, right now. Okay, and that was the ES today. Let's get back to this. All right, so this is our spreadsheet for the day, the month, and the year. Actually, the last 5.5 years. As I said, today is the 24th day of July, 2018. And if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today we made 20 ticks in the euro, 10 ticks in crude, and we lost 8 ticks in the ES. That put us at plus 125 on the day. Today we took 27 minutes and 5 trades to get to the goal for the day. At that point, we're at 103.75, and we took a total of 11 trades. On the month now, we're at 14.91 a quarter. That's over 16 days, averaging 93 bucks a day. On the year, now, we're at 20,770. That's over 133 days, averaging $156 per day. Okay, 156 per day on the year. All right, so it's kind of a slow month so far. We do have, I believe we have 5 trading days left, right? 1, 2, 3, 4, 5. Yep, we have 5 trading days left to the month. So hopefully we'll get that up over 2,000 by the end of the 5 trading days. Okay. Now, if you have not taken a free trial with us, just go to the home page here at CFRN.net. Right over here it says 5-day free trial applied at CFRN.net. If you click on that, or you can scroll down, click on free 5-day trial, or use our proprietary indicators free. Any one of those, and eventually you'll be brought to this page. And on this page, all we ask for is your email, your first name, and how you found us. And you hit that submit button. Once you hit the submit button, you'll be sent to confirmation link. You must click on the confirmation link. Okay, if you don't click that confirmation link, we don't know that you took the free trial. So you got to click on that confirmation link, all right? All right. That is that. Okay. With that, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah, we are ready. There we go. That should do the trick. Yeah.
That has done the trick.
Okay. So,
Yep.
Recap of the recap.
Today, it took 27 minutes and 5 trades to get to $103.75.
Wow, that's very good.
That is good. 103.75.
Fine day. Hey, have you ever used the voice recognition tool in Windows 10?
I have not.
Yeah, interestingly enough, I was in a mentoring session yesterday with someone who is not only learning how to trade, but this is their first time really using a computer. They're in a line of work their whole life that did not require computers, and they just he never had a need for it. So now he's got a twofold task, and one of the issues he was experiencing was in the morning he wanted to ask you questions. But by the time I could type out, the question, the session was already over. So, he doesn't have typing skills. He has to hunt and pick.
Right.
And I found out that with the built into Windows 10 speech recognition tool, which it's a pretty cool tool, but it didn't really do what it said it was going to do. It said any document or any form that you have on your computer, or any application that you're using. I mean, you can use it to open and close applications. You can say, you know, open DT Pro, and it'll open DT Pro. And when you're done, you can say close DT Pro, and it'll close if you have it in listening mode. But the reason it's said in the original explainer text that any application you were using that required the input of text, that if you simply put the cursor in that text box and started talking, that it would do the typing for you. I didn't have much time to experiment with it today, but I did try it in GoTo during the live training room, and it didn't seem to work. I may not be doing everything properly, but then when I put the cursor up in like a Google search window, a web-based text field, it worked. I don't want to say it worked great. I was trying to say test 1 2 3, and you won't believe the stuff it typed, but it wasn't test 1 2 3. So if it's true that you can tie it to specific applications, I mean, you would think if you can tell it to open a program, then you would be able to tell it, you know, to type. I mean, it works flawlessly in like email and Word and Google Docs. And by flawlessly, I mean you say it, you speak, and it types stuff. Now there's a tutorial or training thing in there under ease of access. Under, you go to control panel, I think it is, voice recognition, ease of access, something like that. And you can keep reading this text, you know, over and over and over until Cortana starts to recognize your voice and what the words actually are. And so I didn't have time to go through that. I just wanted to make sure that the function worked that I gave the gentleman yesterday, and unfortunately it looks like it didn't. So if someone in the audience knows how to use that properly, please let me know. And Frederick said that he heard that woman's voice earlier. It was just sort of, you know, your basic shriek in a horror house kind of thing, and then it was gone. So don't know what to say about that.
That is. Yeah, I didn't hear it at all when you said that. I didn't hear it at all.
Yeah, me and Frederick, we listen pretty close. All right, so are you doing a workshop today?
I am at 1:15, and John is in the audience.
Okay. Well, if you don't mind, on your way out the door, if you're leaving, just flip his switch and we'll carry on.
Okay.
And just a reminder, guys, that Dr. Tom Barrett, our investment grade gold guest, will be with us at 1 o'clock today. And you, right now, all of you, can go to CFRN Gold, that's one word, CFRNGold.com, and get your information kit, your starter kit, so that we can all be on the same page. All right. John, yes. Welcome to the show.
Yes, his mic is open.
Okie doke. Well, we'll talk till he comes. S&P 500 up here again. These are last week's zones. All charts will reflect last week's zones until Thursday, when we reveal them to just, you know, the entire community. Partners have first dibs. They get emailed out to the CFRN partners every Monday morning at 6:15 a.m. Eastern. Now, last night, the Concierge Trade Alerts, we'll start in on these as we wait for John. Oh, I don't know. I know that a lot of you served in the military, and some of you have security clearances. I fell into that category, oddly enough, as a young man. President Trump on Monday threatened to revoke the security clearances of former high-ranking government officials who have criticized him by saying he failed to adequately confront Russia over its election meddling. The president is exploring the mechanisms to remove security clearances because they politicized and in some cases monetized their public service and security clearances. Well, I mean, if that's true, then it isn't. Let's see. Critics say that the threat amounted to an abuse of power. It is intended to punish and intimidate his critics and is shameful. That's a former attorney for the CIA. They got a lot of attorneys. And pray for the people in Greece. 2 wildfires swept through resort areas near Greece's capital, Athens, leaving at least 49 people dead. Dozens of others were injured and in serious condition. The blazes were fueled by winds that reached 50 miles per hour. Authorities deployed Greece's entire fleet of water-dropping planes and helicopters, hoping to keep the flames at bay long enough for vacationers to escape. In some areas, it wasn't enough. Wow, I don't know that I've ever heard of a fire moving so quickly that so many people were unable to escape. That truly is a tragedy. Do keep those folks in your prayers, their families, the people of that whole area that have to try to put life back together. Okay, last night on the Concierge Trade Alerts, our suggestion was to consider being long the S&P 500 at 28.21 if the opportunity presented itself. And interestingly enough, maybe not so, oh yeah, it presented itself twice. You always hear us say that important prices in important areas are almost always tested. Well, this is one more example of that very thing happening. We went up through 28.21. A little consolidation there below last week's zone, and then up we go. And looks like the swing high here, 28.31.25. So that's a 10-point move. Of course, we never get out at the swing high or the swing low because we trail a stop, or at least we teach to trail a stop. And so if you trail in the manner that we teach, then you're always going to leave a little something on the table. And that's just something you know, over time, I guess, you get to be okay with. So from 21 up to 31. Now, we were also prepared for two-sided action. And so we also said if you get the chance, the opportunity presents, and it did, but only one time, consider selling 28.15. Oh dear. $28.15, there we go. Yeah. And the swing low, 28.11. So that's 4 points. And sell 28.15. So that was the S&P for last night on the Concierge Alerts. All right, John, are you there?
I'm here. Hi.
Oh, I'm sorry. Yeah. Okay. Yeah. When we first turned the mic on, you weren't there, so I thought I'd go ahead and cover a little ground. How are you today?
Not too bad, thanks. I've got a few interesting things to tell you about today that are kind of really mind-blowing in a way. Yeah.
Dr. Tom will be joining us top of the hour, but we've still got 40 minutes.
Okay, good. First of all, look, this market, you know, you had a blowout number on Google, and the NASDAQ is negative, just went negative, and the mid-caps are negative, and you have to be very careful of a day like today, because you know, the semiconductors are turning down. The drug sector, for some reason, is getting hammered very badly today. And the NASDAQ is actually starting to accelerate to the downside. And the Dow is the sort of odd man out. The S&P kind of, you know, in between the NASDAQ and the Dow. S&P's half, I guess it's probably up half as much as the Dow. So you've got a pretty dangerous situation developing here, because if this sell-off accelerates, oh, by the way, a lot of stocks today are really heading, including Twitter and Amazon and Micron, you know, all these leaders are actually getting hammered pretty hard. And Intercept, for example, which we sold right at the top, is also getting hammered today. Madrigal, you know, all the drug stocks. So it's just just a bloodbath. It's not, you know, if I wasn't telling you about it, you wouldn't know about it. So, and the VIXs are just, look, I think you got to buy the VIX here because the VIX is starting to, it's at 30.72 right now. The VIXs are starting to, they put in a kind of a spike bottom this morning, and there's a pretty strong looking double bottom on the VIXs. That's, in my view, worth a bet. Just the same as this morning, I just decided to put a buyout on the grains, and we're up about 9 on the beans. We were down about 4, so we've had a pretty good update on the grains so far. And last night I was very lucky. I got, you know, I pretty much got the lows of that pullback on the metals, even though it didn't look really like a great buy. It turned out to be, and we rallied about $10 on the gold right up to the highs, which we sold this morning. And to be honest with you, I thought we'd do better. I'm a little bit disappointed that the gold is coming off again. What I'm thinking is, we, you know, between this and the GDP possibly, or something else coming out this week, could have the gold come back and make a double bottom or some sort, or a positive divergent buy against the silver, because the silver outperformed gold. Silver's still up to 8 cents. Gold is down a little bit. So, and the platinum also performed very well, but it's slumping again, and the palladium is slumping off the highs. So the picture is not particularly encouraging. And also the gold stocks got, you know, hit yesterday, but they're up today, which we were expecting. Now, in a perfect world, what I'd love to see is a little bit of some sort of a strength come into these gold stocks in the next couple of days. If the gold were to go down and make a double bottom against last week's low, then that possibly could create a very good positive divergent bottom on the gold, and potentially set us up for some much bigger up moves. So that's kind of well, the best case scenario is we turn here. I'm not sure that's going to happen, but the second best case scenario is what I just outlined to you. The worst case scenario is the bottom's not in yet. So the Nasdaq, cheapest this Nasdaq's losing. Fortunately, you just put a sellout at 74.37 off a rally, and it's down to 74.15 right now. So it's, and you know, unlike yesterday, which was, you know, we had negative breadth all day, we've actually got positive breadth, but the indices are going down today. So it's kind of a weird. Well, I guess we got positive breadth because of the Dow mostly. So and yesterday afternoon we had buy stops above the market to capture possible good results of Google, which actually happened. And as you know, the Nasdaq went up quite dramatically overnight, but it has not been able to hold its gains, which is something that I outlined yesterday. I said, look, you know, you can't tell how this is going to play out, whether it's going to be, whether we're going to the moon or whether we're going to turn. And, you know, I said yesterday, you know, it could last as little as a day if Google sells off from the open, which it actually did. Matter of fact, we put a sell in on Google right at the high last night. I think GOOGL was at 1280 and GOOG was at 1270, and I think we're a lot lower than that right now. So we practically, in fact, we're dramatically lower. We're at 1240 on the Goog right now, and 1243, and GOOGL we're 1250 probably on that. So yeah, 1252, 1253. So you know, getting out at 1280 last night was a pretty cool exit point. Right, it was pretty much the high actually. So
which one was that?
On Google with the L on, Google and Goog. Both of them. The one was 1280 when we put the sell in, and the other one was about 1270. And they never got there today. You know, that was the high last night. So, and you know, this is a. I mean, I'm telling you, you know, there's always a chance that a real wallop could come out of nowhere. And this afternoon might be, and to be down on a Tuesday is not a very good thing. You know, if the Dow goes negative today, from up 250 or so, forget about it, or 230.
I mean, what do do you think about that?
Yeah, that's another. You know, the thing about the Russell is, you know, we've had these heart attack sell-offs, and then it's come back and made a new high. I'm not so sure. I think we're running out of lives, you know, lives or lifelines for the Russell. You know, from the previous sell-offs, we've had about 6 of them now. Maybe there's 9 lives to go, you know, or 3 more lives to go. I don't know, but it's definitely a troubling development for sure. And I noticed yesterday that NVIDIA was not acting very well either, and it's actually gotten hammered pretty hard today. It's gone down about $10 from yesterday's high. So and it has not been able to make a new high. So there's a lot of sort of subtle things going on in the market that are troubling. And this is, and you know, we're running out of time. I mean, I thought we might rally into August. Maybe we won't. And we don't know how the market's going to react to this GDP number that comes out, which according to one article I read yesterday could be as high as 5.3%. Incidentally, back in 2003, the last quarter, we reached 6.8% GDP. That was the beginning of the Iraq War. And that year we had forecast a 6% with the possibility of a 7% spike, and came in at about 6.8. That's the highest GDP we've had in 20 years. And we've had we had one spike back in the Obama days. So, you know, if we were to get above 5, that would be a huge achievement. I think, you know, with all this growth going on in these different countries around the world, there is an outside chance that we could get to 6 or 7% before the end of the year, which would be tremendous if that's possible. Incidentally, another thing that we mentioned was about the Chinese markets. They actually did put in a pretty good bottom the last couple of days, and they gapped higher today. So, and I noticed that one commentator was saying that the Chinese have already got some kind of a stimulus program going on, and it looks like a you know, a 3-way pullback.
The Hang Seng closed up 400 points today.
Yeah, no, it's a big deal, and I think that's part of the reason. So the Chinese, you know, the Chinese market has dodged a bullet, and this leads me to the next thing I'm going to say, which is, you know, on Friday we started saying late in the day, when you remember we were in a sell-off last week for several days down, and I sort of said, you know, the way the market was acting Friday, be careful, because if there's any kind of a hint of a tariffs being taken off or reaching an agreement, then the market could rally, you know, very suddenly, which is exactly what it did. And it was possibly in anticipation of tariff amelioration, and but Google and these other things also helped. You know, Microsoft helped on Friday, and then Google, you know, was a 1-2 punch yesterday. So, but that's kind of, it's already history in a way, just the way the market's acting now. So, but the tariff thing is very interesting, because the Europeans are coming tomorrow to the White House, and I'd say this high probability of some sort of a meeting of the minds. And here's how I think it's going to play out. Yesterday afternoon, Trump announced that this Made in the USA thing that he did, he suddenly came out and said that he was talking to the new president of Mexico, and that he was having tremendous discussions, and he was praising him. And he's a pretty formidable character, this fellow. You know, he's very much the same ilk as Trump in a lot of ways. And he, you know, as we've said on this show, the whole problem, you know, I think the Mexican duty is either 16 or 18%, you know, the VAT tax. So, and that's a real, you know, problem for the US and the whole NAFTA negotiation, because it's an uneven playing field. The whole idea of the NAFTA was to be like Europe, have a, you know, no tariffs between countries. And that was, as far as I remember, the NAFTA thing back in 2000 was supposed to, you know, go to that no tax situation between the two countries. Right. And that kind of got, you know, postponed right up till today, because, as you know, we export stuff to Mexico, and we have to pay these taxes all the time, and it's really a tremendous burden, you know, on the people in Mexico who are buying stuff from a supposedly, you know, free trade market. So the way it looks like, and Trump was saying he's, you know, had a breakthrough with Mexico. It looks as if this guy wrote a letter to Trump, and he outlined 7 major infrastructure projects that he's going to be putting into place in the next 6 years. He wants to raise the living standards of Mexico, so potentially to deter immigration. And he's got a lot of very powerful ideas in that regard, including, you know, getting growth in the rural areas, doing a lot of agriculture, high-speed trains, high-speed internet for the whole country, which is kind of going on, but it's not there yet. And one of the most interesting.
You are talking about Mexico, right?
Exactly, and one of the most interesting things is there's a narrow part of it from the Gulf to the Pacific, which is only about 124 miles across. It's kind of like Panama, you know. I mean, I don't think they can put a canal there, but in the same way that China is doing the Silk Road trains and transports, you know, they're talking about putting, you know, high-speed transportation links, trains and roads from the Pacific coast to the Gulf Coast, to make it easier to get to the Pacific, you know, from the East Coast U.S., which is a pretty interesting idea. And so that could be a big, powerful infrastructure project. And then, you know, this Mexico is going to have one of the most spectacular airports in the world pretty soon, which is one of the things he mentioned. But the biggest thing he came up with is that he's going to cut the VAT tax from 18 or 16 or 18%, whatever it is, down to 8%. That is going to be a gigantic tax cut for the Mexican people, not unlike the Trump tax cuts in a way. And
now,
he's
the VAT is that
yeah,
charged in Mexico?
Yeah. And you know, it's either you either get charged.
Have to pay it? I just thought foreigners
Yeah.
had to pay it.
No, everybody has to pay it.
Huh.
No, everybody, and you have to pay it if you're buying stuff from the U.S. You have to pay more for China. I think you have to pay about 30% for stuff coming in from China. So, what the idea is, you know, I think the state taxes in the U.S. are around 7 or 8%. So, they're basically going to be aligned on both sides of the border, and I think that's a very clever idea, and I think it's something that Trump can live with. And so this is the basis of a pretty interesting foundation. And I think I said on the show, you know, a long time ago, if Trump was to eliminate this tax in Mexico, you know, he'd suddenly become pretty popular. But I think this new Mexican president kind of stolen the praise, if you like, from Trump by kind of implementing it himself and cutting the tax down to 8%. They're also going to lower the gasoline prices to be the same as the U.S., which are right now more expensive. And the most incredible thing he's going to do is he's going to double the minimum wage overnight. You know, that's not going to happen until January of next year. But doubling the minimum wage, which is most people earn minimum wage, or a lot of people earn minimum wage in Mexico, is a huge deal, because overnight, I mean, it kind of raises the living standard. I mean, it's probably going to take millions of people out of poverty overnight, and it's going to it's the hidden thing that's nobody's mentioned yet is it's probably going to increase the GDP of the country by 50%, possibly even double, because the momentum of the tax cuts and the doubling of wages, I mean, it's going to raise wages across the country. That potentially could double the GDP. Well, I think the Mexican economy is worth about 1.2 trillion. Believe it or not, Texas is worth more than, I think it's double the Mexican economy, which is pretty amazing. But it's going to, it'll actually enable Mexico to leapfrog from about 12th in the world to somewhere like 7th, 6th or 7th or 8th. You know, they've been saying for a while that in 10 years' time, or 5 or 10 years' time, you know, the Mexican economy could be bigger than France. So this is going to single-handedly and, you know, literally overnight is going to have a dramatic impact on the GDP. By the way, the same thing is happening in China, but not, you know, not in a kind of a one fell swoop, you know, increase in wages. The wages are just going up over there at a fairly rapid clip. That is one of the reasons why the Chinese GDP is growing so rapidly. But this could be a real game changer because, you know, I mean, doubling the minimum wage overnight really sort of deters from Mexicans, you know, taking the immigration way out, if like. And there are other initiatives that they're talking about to kind of, you know, stop all this immigration that's going on at the moment. I just watched a show this morning, and the Border Patrol is saying they're still arresting 1,000 people a day. And there's about 300 or 400 people a day that are undocumented who are showing up. But I think they've got a new deal going on now where if they try to come in legally with no document, trying to get asylum or something, they're just told to go back. You know, you got to have some kind of documentation. So those 300 or 400 people a day are getting turned back. The 1,000 people a day are getting arrested, and that's, remember, those are the people who don't make it. So there's how many more are getting through without being arrested, and then the ones who are being arrested, about half of them are being prosecuted, you know, for illegal entry and stuff like that. So that's kind of the status. But the you know, raising the minimum wage will give the country a tremendous boost. And remember, in some of the big cities, the GDP per capita is a lot closer to what it is in the US. It's not 45 or 50,000 a year, but it's maybe about 35 or 40,000 a year in the big cities. So, you know, they're gradually getting up towards US living standards in a lot of ways. But this is going to be quite an eye opener, and I think it's going to solve this issue of the differences between Mexico and the US, and it's going to really create a kind of an even playing field for the future. And look, you know, 8% is not a killer. You know, 18%, that's a big deal, or 16%. You know. But 8% is I mean, most people can live with that, you know?
Well, the change over the last 15 years has been pretty substantial in Mexico.
You're right. You're right.
I mean, are the cartel wars still as big a problem as they were? Are people still being
it's probably worse than ever. It's yeah, it's the murder rate is 30,000 a year now, and that's an all-time high. And it's you know, there's a lot of kidnappings and things, and these cartels are kind of out of control. You know, there's a lot of them fighting between each other and things. So it's going to be interesting to see whether this fellow can somehow. I mean, he's talking about some sort of amnesty for some of these people, but that's a pretty extreme kind of a move. But
well, I think so.
Yeah, so
all these other things that you talk about, is it possible to? Do you see a way to pull that off with the violence? With the violence continuing?
Well,
is
look,
the average person afraid to go to the grocery store?
In certain places, yeah, you definitely have your wits about you, and you know, it's kind of like anywhere. It's like the U.S. You know, you don't go in some neighborhoods it's kind of like that, you know. And it's like London. I mean, Jesus, you know, the situation in London these days. I mean, you read about it every day. You know, there's stuff going on in London. It's, I mean, you know, you and I grew up in a pretty innocent time. I mean, listen, when I was living in Ireland, I don't think I ever heard of anybody being murdered. You know, it just didn't happen. And it was just, you know, very, very rare. And today it's totally different. You know, it's a lot worse.
It is possible for a country to turn itself around. You commented the other day that Medellin has become a favorite place for expats.
Well, actually, not so fast. Not so fast. Medellin is kind of slipping back into its old ways. Yeah, yeah. I saw some pretty bad reports out of it the other day. Jeez. Yeah, there's some neighborhoods in Medellin now that is just as bad as ever. So I think you have to be, you know, I don't think Colombia is quite the paradise it's been kind of talked up to be, you know.
Well, what fueled everything in the past tended to be cocaine. As you know, marijuana was once a part of the equation, but with it being legal and semi-legal in so many states in the U.S., that's really not big business anymore. And marijuana is bulky, and there's transportation issues, but it's this fentanyl that's coming out of these Chinese laboratories, flowing into Mexico, that's then flowing back up across the border. The big problem now is opiates, you know. In the 70s and 80s, everybody was wide-eyed and dancing all night. And in this decade, they just, you know, want to do what they do, and then, you know, curl up on the couch and scratch their nose. So, and it's getting worse. And it's going to get worse before it gets better. And I know Trump, you know, made some token comments that he was going to do something to step in and try to help out and make some resources available, but it's been bad. I've got Dr. Tom here. I'm going to bring him on the phone and on the line. And so if you want to hang out and talk to us for a minute, by all means, do so.
This time I might have to bow out. All I can say is stocks are really starting to look very bad here, and the VIXs are starting to go up. I mean, when we said it was 30.70, we're now 30.95, and they're starting to accelerate to the upside. So this could turn into a bit of an ugly day if this doesn't get nipped in the bud. And the other thing is the oil back up sharply today, possibly on that jet that was shot down over Syria, by the Israelis.
The S&P's right back down to our trigger. Important prices, important areas, almost always tested, and so it's come back.
This might be a place where you could get a bit of a rally. So I tend to agree with you there.
But what's important is if we do rally, we've got to take out this high right here at 28.28.
Yeah. Okie doke. All right. Thanks.
All right, John.
Thanks, Dwayne.
Thanks so
All
much.
the best.
Okay.
Bye bye.
Have a good day.
You too.
All right. Let me find your microphone, Tom. I'm moving my monitors around, and it's a week later. It's still discombobulating. Okay, your mic's open. Hey, Dr. Tom. Welcome to the show.
Hey, how you doing, sir?
I'm good. I'm good. What's going on in your world?
Well, I love chiropractors.
So how did you hurt your back?
I don't really know what I did Friday. I just, all of a sudden, my low back just stabbed me in the back. And I had a bad weekend. But I went to the chiropractor yesterday, and he snapped me into place.
He snapped you into place.
There you go. Thank the Lord for chiropractors.
You know, I remember growing up, small town in Georgia. There was, I think, one, maybe two chiropractors in town. It was a town of about 8,000 people, and I think it still is. But people were pretty divided. Either, you know, chiropractors were a godsend, or they were, you know, evil Satan himself kind of thing. I mean, people were very passionate about how they felt towards this, you know, junk science. Some called it junk medicine. Apparently, though, you, and when I first met my wife, she, in San Diego, she worked for a chiropractor. So apparently you don't think that the chiropractor is the devil.
No, I almost became one, actually. I had such good experience as a young man with them. They've been a blessing in my life. I mean, it's like anything else. There's bad medical doctors. There's bad chiropractors.
They were called bone crackers. Yeah, that's what, when I was a kid, I used to hear that all the time. Oh, yeah, he went to the bone cracker, you know. They get his back cracked. I know it's a little more sophisticated than that.
It is, yeah. But, you know, there's good and bad in every profession.
Sure.
I was just telling a friend today, you know, everybody knows that the two leading causes of death are cardiovascular disease and cancer. Do you know what the third leading cause of death is?
Let's see. You just said cancer and what heart disease?
Cardiovascular disease.
Okay.
So that's stroke and heart disease.
And in cancer, somehow I really feel like I should know this. They say sitting is the new smoking, but I don't know. Go ahead. Tell me. And I'm going to go,
well,
oh, I knew that. Yeah, go ahead.
The third leading cause of death in the United States of America is medical error. So that's either mistakes in surgery, mistakes in patient care in a hospital, or prescribing the wrong medications or too much medications, whatever. But lumped together, all those categories of medical professionals making mistakes. So one thing about a chiropractor is they can't kill you.
Yeah, I did know that was a big, well, they can. They could break your neck or some other odd thing. But I knew that the misprescribing and all of that you just talked about was a big problem. I didn't know it was number 3. If I'd had my wits about me, I would have probably said over the last few years, the third leading cause is opiate overdose.
That's definitely crawling up there. It's becoming a bigger and bigger problem.
And it's going to get a lot worse because the FDA has clamped down on all the clinics and the doctors who would so freely write the prescriptions for the oxycodones and the oxycontins, the stuff Purdue originally came out with, and then Watson picked it up. But they told all the doctors it's not addictive, but then they uncovered internal memos that in fact it was, you know, highly addictive. And so many years later, and so many addicts and tragic deaths later, the FDA is now clamping down and not allowing doctors to so freely write these prescriptions. In fact, the doctors are almost afraid to prescribe pain medication at this point, which create you. So you got all these zombie, you know, junkies walking around on the street, and they can't get a fix from their doctor, so they're going to turn to the guy at the corner store. So this fentanyl, you know, it is so powerful that even just a tiny grain, a couple little grains of it can cause somebody who does not have a tolerance level to overdose. And that's happened to several police officers who've gone out to the scene of an overdose. So now they all wear gloves to protect themselves. But the Chinese lab sent it to Mexico, and then in Mexico they use it to create look-alike pills, like the pills that people used to get from the doctor up here. They mix it in with the heroin, so now, you know, a little bit of heroin goes a whole lot farther, and it's a whole lot cheaper because they make this fentanyl for practically nothing in the laboratories. And they've even started spiking other drugs like cocaine, methamphetamine, with just a little bit, just enough of the fentanyl to get you opiate addicted. And so then meth and coke, drugs that you know, historically have not had physical addiction, just mental addiction, psychological addiction, they now hook you physically too. It's pretty sinister and it's pretty sick. And
I'm starting to worry about you, Dwayne.
if our government doesn't do something pretty quick, we're going to have I mean, the problem is the epidemic. I have a very close friend whose son recently passed from an overdose. This very stuff we're talking about, and so yeah, it's big, and everyone in this audience knows somebody who is currently addicted to pain medication and or street drugs. And if you are shaking your head going, nope, I don't know anybody, then I challenge you to think about it, because the odds of you not knowing someone are astronomical at this point. So anyway, I know this was a radio show about drug addiction.
Right.
But I think
the one thing I'd say to your audience, Dwayne, is that if they have children, they should have a zero tolerance policy for any kind of drugs, including marijuana, because no matter what people say, it is a gateway drug. It does lead to other drug addiction. So just crack down on your kids really hard if you don't want to have them become one of the zombies Dwayne was talking about. Yeah. And pray for them a lot. Pray that the Lord will lead them in paths of righteousness.
Amen. And raise them up in the way that they should go, and when they're old, they won't depart from it. Sadly,
That's
so
right.
many of the people today who are experiencing this problem, they didn't just start out as deviant, drug addicts, hoping to get addicted to something. They had a legitimate injury. They hurt their shoulder at work, or they fell playing tennis, or whatever the case might be, or their ACL at soccer. They go to the doctor puts them on the medication, they take the medication, pretty much as prescribed, but then all of a sudden the doctor takes it away, and that's when the problem sets in. So, Dr. Tom, I didn't give you an official introduction. For anyone in the audience that doesn't know you, hasn't met you yet, hasn't heard you speak, but to give us just a little thumbnail of a background.
Okay, well, for the last 41 years, I've been an ordained minister. I've pastored in 7 churches, but I've never taken salary from a church. So if you saw me, you'd know that I haven't missed too many meals. So how have I supported myself? Well, I've worked mainly in business, but primarily in financial services. So my background there is I started off as a junior stockbroker, then became a financial planner, then a senior broker, assistant branch manager, national vice president, and then eventually investment banker. So the Lord has blessed me in allowing me to learn all the different aspects of the financial services industry. So my mentor, Peter Wagner, one day told me that he loved hearing me teach because I speak 2 languages. And I started to say, well, what are those languages? I'm not aware of this. Mm-hmm. I speak pretty decent English, and I do a great Donald Duck for the kids at the church. But other than that, I'm unaware of any second language. He says, well, you speak business and you speak kingdom. So I like that. There's a lot of people in the church that teach about what the Bible says about money, but if people ask how they can put that to work in a practical way in their lives, they can't answer it. And then there's Christians who are financial services professionals that teach the same exact things the secular guys do, but they can't put it in a theological framework because they don't really know the Bible. So that's sort of like my little niche area. I teach finance from a kingdom perspective, particularly, as I know you're about to say, in the area of gold, because since I retired, I've gotten away from the heavy investing I used to do in stocks and options, and I'm more focused now on precious metals.
Why precious metals, and why now? Although you've been on this bandwagon for, well, you've been a pastor for 41 years. How long have you been? You went through the financial services industry, but when you arrived at investment grade gold, how many years ago was that?
Well, I've always been about gold. I've always invested in gold. When I was a very young man, I bought about $250,000 worth of gold at $200 an ounce. So hard to imagine. Yeah, that was pretty cool. And I sold it in 1980 when it was 800. So basically, I was a millionaire for the first time in my life, and I was fat, dumb, and happy. What I didn't realize until I really started studying inflation years later was that I hadn't made anything. That gold bullion is not an investment. The only reason the gold went from 200 to 800 was because the dollar had dropped so much in value. And so the $1 million would only buy me what the $250,000 would have bought me. So That's the first thing I'd like people to understand about bullion, is that it's not an investment. It's an insurance policy. For 3,000 years, an ounce of gold has bought the same amount of stuff. So that's good if you're wanting to protect assets. But I don't want my investments to always stay the same. I want them to grow. So there's, just real quick, there's 4 principles. If somebody really wants to make money with precious metals, you have to understand, number one, that cash is trash. Well, the first time I talked to you, I knew that you understood that. You understood that our money is losing value every year. It's lost 96% since we went off the gold standard, but it continues to lose value. Number 2, bullion is better because it does protect you against inflation. So as the dollar drops, gold becomes higher in price. But remember, it doesn't increase in value. And the third principle is that investment grade gold grows. It grows in real value, historically about 8 times as much as bullion. And then the final principle is European investment grade gold rules. It used to be US gold ruled. It was the fastest growing and most profitable segment of the rare coin industry in the world. But now it's European gold.
European gold?
Yeah, European investment grade gold. And the reason is pretty simple. U.S. coins, it used to be a hobby, frankly. There was a few thousand big enthusiasts in the country, and they had little shows here and there, and everything was hand graded. You might be wanting to sell me a coin, say a U.S. pre-1933 $20 1 ounce gold coin, and you'd say it's uncirculated. That's how you pre-1933, because 33 was when FDR took us off the gold standard. So you might represent that coin to me as an uncirculated coin, which means just as it came from the mint, no wear, no scratches, perfect condition. I might look at it and say, well, you know, it doesn't look like uncirc to me. It looks like extremely fine. And so you, Dwayne, might say, well, let's go over to Joe over here and ask him to grade it. He's a professional grader. And so he charges $20. Each of us give him a 10, and he grades a coin. And he says, yep, Dwayne's right. It's uncirculated. So I buy it from you based on old Joe's certification. Well, I find out later on that Joe is your brother-in-law, and I'm not very happy because it really wasn't an uncirculated coin. So this actually happened. This kind of thing happened. And so back in 1974, 33 of the top dealers in the country, one of them being my partner, the guy who buys my gold coins in Europe for me now, got together and put together a grading set for a brand new company called PCGS, the Professional Coin Grading Service. And what they did is they provided independent third-party grading, but also certification. So if you had a coin that you thought was an 1802 5 guineas coin, they could certify whether it was genuine or not, but they would also grade it. And then another company came along the next year called NGC, the Numismatic Guarantee Corporation, and they did the same thing, providing competition for PCGS, but they also put a new wrinkle in it. They guaranteed their work. If it isn't exactly what they said it would be, they'll buy it back from you at full price. So then, of course, PCGS had to offer the same service, and a whole new industry was born. So over the last 40 years or so, U.S. coins have gone up, in many cases, thousands of %. European coins have gone up every year as well. Matter of fact, for the last 100 years, both European and U.S. investment grade coins, and we're talking about the high grade, high quality coins, neither has had a down year, but the U.S. coins have gone up about 10 times as much. Well, the only difference between the U.S. coins and the European coins is simple. It's PCGS and NGC. It's independent third-party grading that allows me to buy coins sight unseen. I bought coins just in the last 6 months, anywhere from $2,000 to $2 million that I've never seen. But I trust PCGS and NGC, and if they say the grade is so-and-so, then I can buy with confidence. So that's what's made the difference. That's starting to happen now in Europe, but we've shifted our buying from the US to Europe for that very reason. It's an arbitrage opportunity.
Now, when you say you bought a coin sight unseen, but you felt comfortable because it had been graded by PCGS, correct?
Correct.
Now, we actually, one of our regulars in the audience, Jim, are you here today? He messaged me last week. I saw it after the show ended. He was one of the founders of PCGS. Jim, I won't put his last name out there, but Jim, are you here today? He's here most days. I guess not today. Anyway, I get my okay. So I order it. I buy it sight unseen. It comes UPS. I open the box, and there's my coin, and there's the paper, the pedigree, where PCGS has, you know, signed off that this is the real deal, and it's smoking hot. How do you know that that piece of paper is actually talking about that particular coin? I've always wondered about it. I've always wondered about that with all certificates of authenticity. I mean, that is a real thing, folks. I know most of us laugh about it because we hear it on TV and the Franklin Mint and other things, you know, blah, blah. But it is a real thing. But the fact that you can't, is there any, tell me, maybe there's some new technology I don't know about.
Well, first of all, it's not a piece of paper.
Okay.
Okay. The grade is encapsulated in a tamper-proof ballistic plastic container.
Okay. Now,
So,
I've seen those containers, but I didn't know that they were
yeah.
bulletproof.
Next time I come on your show, I need to bring you some PowerPoint slides,
Okay.
because that way people can actually see the coins and see how it's done. But there's no other collectible in the world besides diamonds and coins that's actually certified. Now, you can get an appraisal on an antique piece of furniture or painting, but that's not the same thing.
No.
They're saying, well, my opinion is this is the value. But if it turns out that it's a counterfeit, and you paid this guy $5,000 to appraise this painting, if you're lucky, he might give you back the $5,000, but he's never going to make you whole for what your losses are. So the only other collectible is diamonds, but the diamonds are just as you described. You get the diamond in some kind of container, and you get a piece of paper. So when I was a young kid, I used to work in the jewelry business. You could take a bright white diamond with no inclusions. That means no carbon spots, no little fissures, no cracks, perfect diamond, and put it next to a yellow diamond that's full of inclusions, and 99% of the consumers would not be able to tell the difference between the two.
Really?
So a guy could get a bright white graded or certified, and then take that piece of paper and sell it with a yellow diamond, and no one would know the difference.
Right.
Can't be done with investment grade coins that have been graded by the two major services. Now, there's some Mickey Mouse mom and pop shops that it might be possible, but these guys actually guarantee.
And just out of curiosity, have they ever been called on the guarantee? Has it ever been an issue that you know of?
From what I've been told, it's happened 11 times in the last 40 some years. So that's a pretty good record.
Yeah.
And usually those are cheaper coins because they're more easily counterfeited. The really high quality, extremely rare coins, everybody in the industry knows them. There may be only 3 that exist in the world, and they all know who's got them and where they are, so that if they came on the market from an unknown, they would just assume it's a counterfeit. So they usually,
I'm sorry, go ahead. Go ahead.
They usually try to counterfeit the more common coins. Anything that's under 5,000 is considered by most people in the industry to be rare. My partner and I don't consider anything desirable unless it's less than 1,000, and we really don't get our motor going unless it's less than 300 known. And we have purchased coins that were less than a dozen or even one-of-a-kind coins.
So the tamper-proof packaging is what gives you the security that it is what it's being sold as, because it's been graded by PCGS, and then once they grade it, they're the ones who encapsulate it in the
Yes.
little square case. And so, all right, once they grade it,
excuse me, Dwayne.
Sure.
There's another layer of security to this, though.
Oh, okay.
Which is really neat. You've been pulled over by a cop, right?
Oh yeah.
Before.
Oh yeah.
What is the first thing he usually does before he even gets out of the car?
Before he gets out of the car, he probably runs your license plate.
He runs your plate. He picks up his microphone. He reads off your license number. And if it comes back that it's a black Ford F-150, and that's what you're driving, that's what the plate's on, he comes out with his ticket book. If it comes back that plate belongs to a yellow Cadillac Escalade, he comes out with his gun in his hand.
That's right.
Right?
Yep.
So each of these coins has a barcode on
He
it.
barks over the loudspeaker, "Show me your hands."
Yeah. Get out, scumbag, get out, whatever. These coins have a barcode on them, and you can go online to either PCGS or NGC's website, put in that barcode, and up pops a perfect picture of the coin. So you can see that it's exactly the same coin. If there's a little tiny scratch up at the 2 o'clock place on your coin and it's not there on the one in the picture, you know it's not the same coin.
Okay.
So it's double security.
Gotcha. Okay. So when the barcode is attached to the tamper-proof packaging that it's put in.
Yeah, it's inside. The coin is inside, and on the back they even have a hologram for additional security. You might call that the third layer of security. So it's, there's millions and millions of dollars on the line. There's trillions of dollars of rare coins traded every month. So they have to have high security on this.
And the only way to prove that certification was not what it claimed to be, would be to open it up, to destroy the tamper-proof packaging and get the coin. Am I correct? I mean, I'm trying to think. There's only been 11 cases because, I mean, once it's sealed up and accepted by someone, at some point, some authority, whether it's an auction house, then that's kind of a done deal, and everyone is just kind of living off of the, well, if it looks like a duck and walks like a duck, it's probably a duck.
Well, let's say you had a coin and you had suspicions about it, and you took it to 3 experts in its case, because you're right, you don't want to crack it out. They could see it's very clear plastic. They can see right through it. And if they have any suspicions about it, and you have, like, let's just say, for example, 3 experts say, no, this is not genuine. Then you go back to the company and you say, look, here's these respected experts, and they say it's not a genuine coin. Because it's not impossible to counterfeit coins. It's just very, very difficult.
Okay, would it be more difficult to counterfeit a US $100 bill or some rare coin?
Oh, currency is really easy to counterfeit. Matter of fact, in North Korea, they have plans.
Not easy, but it can be simple. No, that's what about.
Well, yeah, I mean, easy compared to, if you take an ancient rare coin, they know exactly the composition, what alloys went into it, and so on.
Right. Yeah. So
400 years ago, 300
years. You need some kind of machine to like X-ray it or something to see what the composition was.
Yeah, there's a lot of tests they do, but as far as the $100 bills, they're nicknamed the super bill because there's factories in North Korea that run 3 shifts, 24 hours a day, printing US $100 bills, and you probably held one in your hand. Now, a few years ago, they came out with all these biometric features where they can actually track the bill and see where it's going, and that's cut back on the counterfeiting quite a bit. But in the past, it wasn't that difficult. But counterfeiting coins is extremely hard.
Okay. So now, if you had a coin that was, one of a dozen, or maybe one of a kind, as you mentioned earlier, something that rare, do you want to seal that up, or do you want to keep that out so you can hold it in your hand and show it to people? What's the
well, if you hold it in your hand, number one, if it's silver and you hold it in your hand, you're going to get oil from your hands and even acids and whatever, and it's going to cause the coin to tarnish. Once it's sealed up, it's hermetically sealed. No air, whatever, it's not going to degrade. Gold coins, they pulled up gold coins. I wear one around my neck that was in a treasure ship, and they pull them up after a couple of 100 years on the bottom of the ocean, and they're just as bright as the day they were born. So that's not an issue. But if you got a gold coin, you're handling it, you can easily scratch it, drop it, damage it. So in either case, you really, really want them graded, but also you want the security of knowing that some expert has looked at it under a microscope, has verified that it's really what it says on it and the condition. Because I'll just give you an example. We use a $20 coin. This is an article in the Wall Street Journal where two coins, I can't remember the year, but they're both from the same year, two $20 circulated coins, but only very slightly circulated, were for sale. And one of them sold for $5,000 and one of them sold for $22,500. Well, first thought out of my mind would be, well, one was from the Culver City Mint or the Denver Mint, one of the smaller mints, because most of our coinage was minted in Philadelphia. So if it was from a smaller mint, then there's fewer of them made. Maybe that's the reason. Well, no, it turned out they were both from the same mint. Well, then you look at the grade. Well, sure enough, the one that sold for $5,000 was an MS62, which means mint state 62, and the other was mint state 65. Mm-hmm. So you say, okay, well, 3 points difference, but hold up. 3 points difference is not enough to make a coin worth 5 times as much. So what's up with that? Well, it turns out there's a thing called condition rarity, okay? And what it boils down to is how many coins in that condition exist in the world. Mm-hmm. Well, the coin that was an MS62, there were several hundred of them from this particular year. I think it was like 1910. And then the one that was MS65, there were only a dozen known to exist. So that's a huge difference. Number? The highest is 70. 70. Okay. And it's actually proof 70, not MS 70. Proof is a special type of coin that I really love because they were originally made for presentation to royalty. King of France visits the King of England. He has this special proof coin that is made with a highly polished die and is double struck, so the cameo really pops out. But it's never meant for circulation, so it's really brilliant finish. Mm-hmm. Whereas the ones that are made for circulation have a sort of a matte finish, so scratches don't show so much. So that a proof 70 would be higher than an MS 70. But 99% of the coins that you'll encounter will be mint state coins. And it goes from 1, which is a coin that's practically unrecognizable as a coin, it's so beat up.
I'm curious where MS13 falls in.
There is no such thing.
Oh, there is no MS13. You know that's the gang running around at Trump's.
Oh, I'm sorry, I didn't even catch that.
Yeah.
I've got my head so much into coins when you said that.
MS13. Now, when it comes to,
you were making a funny,
yeah,
and I didn't catch it.
When it comes to the coins, what does the MS stand for?
MS stands for mint state, and it's only coins from 60 and higher. So there's 11 different grades, 60 to 70, that are MS.
Okay.
Anything that's AU would have a grade of 50 to 59. Extremely fine is XF, that would be 40 to 49, and so on. But I'll tell you an interesting story about MS coins. My partner's been in this business ever since he was 13 years old. So he likes to say he's never had a real job. He started trading coins when he was 13, and his father saw how good he was at it, and he loaned him 50 grand. And in 5 years, by the time he's 18, he turned that 50,000 into $1 million, which is quite a feat.
Yeah.
So he likes to say he made his first million before he had his first date, because he was a real coin geek. But once he had $1 million, he didn't have to worry about dates. Girls asked him out, you know.
Right.
Well, about that time, during that time frame, he went to a coin show, and a guy had a whole bucket full of $5 US coins. Our US gold coins used to be $1, $2.50, $5, and $10. And at certain points, they also made a $3 coin and a $4 coin, which most people have never heard of, but they're just very few of them ever made. But the $5 coin was pretty common. It's about the size of a quarter. And this guy had a table full of them. But they didn't have them graded back in those days. It was all eyeball grading. And he kept them in a bucket, so they rubbed up against each other and scratched each other. It was just very poor coin management, if you will. So Greg looked them over, and he saw that there were some that were gems. Gem quality today would be MS65 and above. But most of them were lower grade, MS60, MS61, and so on. So he asked the guy who was selling them for $30 a piece, right? This is when gold was way cheaper, because this is a quarter of an ounce. He asked him, do you mind if I pick through them and pick out the ones that I like? Because he didn't have much money then. This is before his father lending the money. He was only like 12 and a half, 13 years old. The guy says, yeah, but you're going to kind of tie up my table here, so I'll charge you an extra 10%. So Greg picked out, he had a good eye, even at that age, and he picked out 6 of them that were really outstanding. And he paid the $33 a piece, so an extra 10%, right? Well, years later, and this was back when he was telling me the story, which is about 2 years ago, the MS coins from that year, the mint state coins, common grade MS60 or MS61, were selling for around, I think, $690 or something like that. But MS65 and MS66, which were the grades of the coins that he bought, were selling for around $25,000 and $40,000 respectively. Okay, right. So that's how much difference a grade can make. But again, it's condition rarity. There's very few coins graded, $5 coins graded in an MS65 or an MS66 grade level.
And who has the authority to make that call?
Most people only trust the two big guys, PCGS and NGC. Like I say, there are also mom and pop shops, but a lot of them are known for, if you slip them enough money, they'll give you a higher grade. So that if it's a cheap coin, people don't care that much. But if it's anything of real value and rarity, they will only take PCGS or NGC.
Interesting. Now, you mentioned diamonds a few minutes ago. I guess you saw, or maybe you didn't, that there was news out in the last week that they have found what they believe is a massive cache of diamonds buried in the belly of the earth. Let me, I don't know if that's the article. Diamond find. I'm just curious what your thoughts are on diamonds, and could something similar to that ever happen with gold? John made a comment on the show yesterday that all the gold that there is has pretty much been discovered, and then he said, but they just found these diamonds, and who knows, anything could happen. What are your thoughts on all that?
Well, that's true. All the gold that's ever been mined in the history of the world, including all the known gold reserves, would fit in 2 Olympic-sized swimming pools. So that's pretty amazing.
I was going to go with the tennis court. Somebody explained it to me, but go ahead. Yeah, we're on the same page.
Well, either the 2 that I verified, because I thought that was pretty wild when I first heard it, but it's true, 2 Olympic-sized swimming pools, or a cube that's 30 meters on all sides. That's pretty big. That's 2 semi-trucks with trailers, is about the length of 30 meters. But still, that's it's a huge cube. Yeah, the general consensus is that there aren't any huge gold reserves out there still, because they've used ground penetrating radar, they use satellite imagery. Believe me, gold is so valuable, people have done their best. And so it's probable, not certain, that most of the big gold reserves at least have been found. I haven't heard about this diamond reserve, but I'll tell you something that we do know about, and that is that with diamonds, 90% of the diamonds ever mined have never been on the market. The De Beers family, their cartel, if you will, and a few other cartels have held back the majority of the diamonds off the market to artificially force the prices higher. If they all died and their diamonds got put on the market, it would drop the price of diamonds by 90%. And likewise, if some huge cache of gold were found, yeah, it could drop the price of gold. But I doubt this diamond cache is anywhere near 90% of the diamonds ever mined, and that's the real danger of the diamond field.
Well, here's what this article, I found basically the same information on a couple different sites. There are over a quadrillion tons of diamonds lurking 100 miles below the Earth's surface. Scientists use sound waves to uncover a cache of more than a quadrillion tons. The diamonds are in the bottom of geological formations called cratons, C-R-A-T-O-N-S, which are basically inverted mountains below the Earth's surface. They are about 100 miles below the surface, far deeper than any drills are capable of reaching. And so they did this with sound waves. This shows that diamonds are perhaps not such an exotic mineral after all, but on the geological scale of things, it's relatively common. We can't get at them, but still there are more diamonds than we ever thought before. Now, this not being able to get to them, 100 miles, I don't know how deep a well can be drilled, or not a well, but you understand what I'm saying. How they tunnel down.
I used to drill for oil, and there's no such thing as any kind of drilling rig that can drill that deep. But
how do you go about getting diamonds? Are they normally something where you go into a mine and with a pickaxe take them out of the wall? Is that?
Yeah, you dig for them. That's, drilling for diamonds wouldn't do you any good like drilling for oil, because if you pop into the oil pocket, right. And then you can start sucking it out, but you don't want to drill into the diamonds. Yeah. So they would have to excavate 100 miles. What's 100 miles?
Elon Musk awake at night, because he has cash flow issues. And he's
probably shopping for the biggest backhoe in the world,
He's got that really big brain, and he wants to go after these diamonds. Now, I think it was also Elon who was involved in a project, I first heard of it a couple years ago, where they were landing these satellites, something akin to a satellite, on these asteroids, meteorites that are flying by. And they were actually they were doing soil samples because they thought that perhaps there would be precious metals and other minerals on them and that they could mine. And I thought, oh boy, if they start mining this could really do something to the price of gold. I don't know if that project never got off the ground, if it didn't bear fruit. I know that the equipment was launched, but I don't know anything about the results, and I just hadn't really thought about it for a couple of years, I guess. Are you familiar with that?
Yeah, to my knowledge, there hasn't been any significant gold or precious metals found on asteroids, but there have been indications of some of the rare earths.
Asteroid mining,
which
that's a thing. Yeah, it's
yeah. So I haven't really followed it, but I did read an article about rare earths being found, and of course they're essential to the manufacture of cell phones and computers and tablets and so on. And so China was very smart about this. They went around quietly buying up in other people's names rare earth deposits and control of fields that had rare earths in them, to where, as I understand it, they control about 90% of the rare earths. So if they wanted to, they could just shut it off and nobody could buy computers or cell phones except from them. So they don't like us very much, so that's a possibility. Yeah. One thing I wanted to mention, I wanted to give everyone some really bad news, is that every family represented here is about $250,000 in debt, even if they don't have any consumer debt, even if they paid off their mortgage, even if their car is paid off and they have no credit cards.
Thanks to Fred or the Fed.
Yeah, the national debt. The average American family of four owes $250,000. That's their share of the national debt. Or put another way, it's about roughly $65,000 per person, including infants. So we used to have the most respected currency in the world. It was the envy. Our economy was the envy of the entire world because for 57 years, while we were on the gold standard, we had no inflation and no deflation. So we were stable. And other countries were pegging their currencies to ours. Since we've gone off the gold standard, that respect for the US dollar has dropped. It's still the strongest currency in the world, but if you measure it in terms of reserves, you've heard people say that the US dollar is the world reserve currency.
Yes, yes, and I've also heard of late that that's subject to change.
Yeah, well, technically there is no such thing as a world reserve currency. There's nobody that has the authority to designate anybody's currency the world reserve currency. What it really means is that in practice, the world's central banks use the dollar for the majority of their reserves. And until about 20 years ago, that was about 90%. Okay, 90% of the currencies held by central banks worldwide were US dollars, and about 10% was euros, yen, and various other currencies. Today, we dropped down to 60%, okay? And most of the difference, the 30%, is now euros, and the other 10% is miscellaneous. So if we drop down below 50%, we're no longer the dominant. That would probably be the better term, the world's dominant currency. And if we drop below 50%, we're no longer sitting in the catbird seat. And that will have a major effect on the, the lifestyle of American citizens.
Now, it was Nixon who introduced the petrodollar, which I think is kind of tied to that whole concept or idea of the world's reserve currency. Is that,
yeah, it actually, yes, but the seeds of it started actually in 1944 as World War II is coming to a close. The world was in economic chaos. We've been spending, major countries have been spending most of the GDP on war fighting, and now they had to adjust to a peacetime economy. So that's where the dollar first became the world reserve currency, because it had been the pound for the 200 years prior to that. The British pound was the most powerful currency in the entire world. But during World War II, they kept, particularly before we entered the war, they were buying their munitions and planes and tanks and stuff from us. And frankly, I know it sounds terrible to say it today, but we didn't know if England was going to survive. So we weren't going to be taking paper money. So they had to pay in gold. And so after World War II, the U.S. had most of the world's gold. So basically, this meeting of 41 industrialized nations met in Bretton Woods, Connecticut in 1944, and they decided to, everybody pegged their dollar to the U.S. dollar because people didn't have gold to back their currency with. And our currency at that point was on what I call gold standard light. We left the gold standard in 1933 as far as U.S. Citizens being able to redeem their gold, but we were still allowing other countries to redeem their gold or their paper money, U.S. paper money for gold. So that put us in the big dog seat in several ways. That's when the IMF was formed. Well, guess who funded the majority of the IMF? US of A. That's when the World Bank was formed. Same thing. We contributed most of the money to that. And I don't remember when the UN was formed. That wasn't part of this whole thing. But for most of my lifetime, the U.S. has funded over 50% of the UN, even though it's one of 200 countries in the world.
Yeah, that's right. And Trump's pretty upset about that.
Yeah, and me too. I think we ought to evict the UN, get them out of New York. They owe millions and millions of dollars in parking tickets because with diplomatic immunity, that'll pay their parking tickets. So get rid of them. And I think that we should get out of the UN because, well, let's not get off of that or I'll start preaching. Bottom line is that we have been the world's leading economic power. Russia likes to think it's still a superpower. It's puny. Its GDP is smaller than many other countries, but it's still got the nuclear weapons, so that's why they can call themselves a superpower. But we've been it. We've been the world's policeman. We've been the world's financier. We've been the world's rescuer, and that's starting to change as the euro gets stronger. Even though Europe is as in debt as we are, people are doing more business with Europe. And so we're going to have to face the fact that we will not always be the world's reserve currency. But I want to go back to one thing we talked about just briefly, and then we got off of it, but the concept of arbitrage. Mm-hmm. I'm sure everybody on here, being traders, is familiar with arbitrage. And, the most familiar example is if you buy a stock on the Amex for $40.40, and it's trading on the New York for $40.45, you can arbitrage it. You can buy it on one exchange, sell it on the other. Mm-hmm. And if you have enough money and can buy enough shares, you can make some serious dollars. We have an arbitrage opportunity with investment grade gold right now. And that is what I alluded to earlier. Even though in Europe and the United States, neither has had a down year with the rare coins, the US coins have gone up about 10 times as much as the European coins. And the reason for that is that they're not graded on the 70-point grading system. Most coins in Europe, if you go to a coin show, only about 2 or 3% will be graded by PCGS and NGC. The rest are in little plastic flips with somebody's handwriting on a sticker saying that they graded as such and such. So
and that's
if you go to
accepted
U.S.
by
coins,
the world community, by the world coin collecting community.
well, that's pretty much the way it is with the world over.
Okay.
It's hand grading, whereas in the U.S., except for junk coins, really cheap coins, any coin that has any value, 99% of them are going to be in PCGS or NGC slabs. So that's starting to change now. But because of the fact that the U.S. coins were graded, the fact that a guy in Nome, Alaska could buy a coin from somebody in Key West, Florida, sight unseen, with perfect confidence, that's caused the U.S. coins to go up so much that we stopped buying them about 6 years ago because we feel like they peaked out. It's like, if you're looking at a chart and you see a chart up at an all-time high and it's staying there, that's probably a time to be a little nervous and think, hey, this might be time for a dump.
Right.
So we've been buying exclusively European coins for the last 6 or 7 years, and we're buying them 10 cents on the dollar. You put up CFRN gold there on your screen.
10 cents on the dollar, yeah. Mm-hmm.
Yeah. If people go to that site and get the Gold Education Starter Package, one of the things they'll get is a really beautiful piece called Golden Art, and it's got actual examples of European and U.S. coins that are the same rarity, same size, same condition, and even in most cases roughly the same age. And you'll see that on average they're selling for about 10 cents in Europe for the same exact coin in the U.S. So that's where the opportunity is. It's an arbitrage opportunity. You buy in Europe, and then you hold them for some years, and you sell them here in the U.S., and you will be well rewarded for it.
Now, in the process of you holding them, do you get them graded? Let's say I bought a coin wherever I bought it, and I wanted it graded. Would I take it to PCGS or ship it to them to have them graded? Is that how that works?
You would have to either take it to a dealer or become a dealer. They don't just deal with people sending in coins from the street, because one coin here, it's just not worth their while. But as far as us, we buy them ungraded mainly because Greg is considered one of the top 5 graders in the world, and so he knows how to look at a coin and tell what its grade is going to be. So he can buy them more cheaply because he knows how it's going to grade, but the guy selling it doesn't. And excuse me. So when we get them, we immediately send them off to one of the grading services, depending on who's operating faster at that point in time, and get them graded. We won't sell any coins unless they're graded with extremely rare exceptions. There's some cases which take too long to explain why you're actually better off with a coin ungraded. But 99.999% of the time, we get them graded because we don't want anybody to buy a coin based on our estimation of its grade. We want it to be an independent third party.
Okay. Now, you say that the arbitrage idea, the concept here is, buy in Europe, hold, and sell in the U.S. at some point. What do you think the average holding time would be? Is it a year, 5 years, 10?
We suggest that people, if they're going to invest in these kind of coins, that they look for a 5 to 6 year time horizon. Sometimes it can be much less than that, but if they're looking for something to sell in a year or two, then we suggest a lower grade of coin that is more liquid. If they're looking for less than a year, then we suggest just buy bullion, because you need to these are like fine wines. You need to let them have time to mature, and so it needs to be at least a year or two.
This is not a trade, it's an investment. Okay.
Exactly.
Gotcha.
You can trade bullion, but you don't want to do that with investment grade coins.
Well, I mean, for trading purposes, the fake gold's okay. The ETFs and those types of things. Any paper gold. You and I both agree that if you can't hold it in your hand, it's not real, or is it? That's the big question. Now, at the top of the show today, I know it's your time. You've got to run here, but I just wanted to throw this out to you so that you can think about it. A Hong Kong investment firm is launching a crypto vault, responding to increasing interest from high net worth and institutional clients. A Hong Kong-based company is launching a crypto custody service by the end of the year. Fusang Investment Office is an asset manager focused on Asian private family offices. Its Fusang Vault is expected to open for customers in the fourth quarter of 2018. Digital assets are akin to bearer bonds, whereby whoever is holding the security is presumed to be the owner, and there's no registration of ownership information of the security. Now, the same thing could be said for gold and or investment grade gold. It's much like a bearer bond or a cryptocurrency. Whoever's holding it owns it.
Yeah, the big difference is that you can't be anonymous with bullion. Small amounts, yes. But if you buy $10,000 or more of bullion, the dealer has to report it to the government. People don't realize that, but that's the way it is. The last bastion of financial anonymity is investment grade coins, because no dealer is required to report those to the government. Obama tried to make that happen. He tried to make any purchase of any kind of gold, $600 or more, reportable, and he put it in the so-called Affordable Care Act. And of course, it had nothing to do with healthcare. But most of the smartest people in the world, which normally you wouldn't lump politicians in that category, but they are they are pretty smart financially. Almost all of them own gold, and the majority own investment grade gold. It's very popular among wealthy people. So they were not going to let that pass any more than Florida, where I live, will ever pass a really tough drunk driving law, because half of the politicians are alcoholics.
Well, Congress had to pass a law not too long ago that said you really shouldn't trade on insider information. I forget how the law read. But I mean, that was just like one of the perks that came with the job. If you're on some committee and you knew something was about to happen, well, that's how you created wealth. I mean, it was just accepted, I guess. And
that went on for decades.
Oh, yeah.
It was only when people like you and I started blowing the whistle and letting people know that was going on, that there was enough sand kicked up that they had to put themselves in the same place as everybody else. Why did they get to break the law and nobody else does? They're the lawmakers.
Yeah, so now they have to do it on the QT or the down low or whatever you call it. They can't be as brazen and blatant as they once were. Oh boy. Well,
if I didn't know any better, I'd think you didn't like politicians.
Well, I've had my share. I've had my fill. It puzzles me, the person who wants to be in the public eye and the public limelight, and I don't want somebody following me into the bathroom. Secret Service guys. I mean, I wouldn't do well with that. And when you give over your life to public service, I mean, you really are making a sacrifice. And of course, power and wealth are great motivators. People have been known throughout history to do most anything. Kill one, kill 1,000. Give me power, give me wealth. And supposedly that politician, I mean, a state senator really does have quite a bit of pull. I mean, if you know a senator and you need, some kind of favor, he can probably pull it off if he wants to, if he's of a mind to. And I don't even mean anything illegal or shady. Just, you know, you need a construction loan for your business. You know, if you know the senator who could make a phone call to a banker, I'm sending in one of my constituents to see you and hope you'll be able to help him out. I mean, those kinds of things. That's power. And so people, you know, do kill and pillage and plunder for the money and the power. And gosh, I'd rather just sit on a deserted island and read a good book or listen to some music. You know, I just don't have that primal urge to conquer and destroy. And
well, you mentioned
maybe it's because of my
money
age.
being
I don't have as much testosterone anymore. I don't know.
You mentioned money being a big motivator. 1% of Americans are millionaires, while 66% of senators are millionaires.
Well,
there you go.
That kind of speaks for itself.
Yep.
66%.
Matter of fact, it's extremely rare for anyone to leave Congress not a millionaire, even though the vast majority are not millionaires when they get there. And I would bet you that of this 66% that show as millionaires, the other 44% are millionaires, but they've got the money in their wife's name or their cousin's name.
Right. Yeah.
So.
Yeah, I agree with you there.
I hate to sound cynical, but there you go.
Yeah. Are you having a webinar tonight?
I am.
So, folks that go to CFRN.
Oh no, I'm sorry. No, I'm sorry.
Oh,
I'm not. Last night. Usually, I'm on Mondays.
It's on a Monday. Okay.
Every Monday night at 8 o'clock, but there's going to be a great one next Monday, and it's going to be on precious metals. But the gentleman that I mentioned, Greg, one of the top 5 experts in the world, he's going to be on, and you can ask questions directly of him. So if you're interested in those, when you go to CFRNgold.com, request the Gold Education Starter Package with articles and videos, but also ask to be on the webinar list, and we'll send you invitations.
Excellent. CFRNgold.com. Dr. Tom, a very interesting discussion, certainly giving us something to think about each and every time you visit with us, and I look forward to seeing you again next Monday.
Same here, and God bless everybody on the line today. Hope you have a great day.
Have a great week. We'll talk to you soon.
Bye-bye.
Okay. All right, guys, we're going to head into our good word for the day here momentarily. Let me take care of Dr. Tom's mic for him. Or I think he already... Nope, there we go. I'll mute it for him. All right, we'll go to our good word for the day here in just a moment. But let's finish up with this recap. Get my notes back up. Come on. There we go. Okay. So we already walked through the S&P. CFRN Gold, all one word, .com. I put some fibs on this chart from the swing low yesterday. Actually, the swing low was Sunday night. To the swing high this morning. Okay. Let's see, that was... Okay. We're sitting right on top of the 50% Fibonacci retracement, which also happens to be right in the vicinity of last week's weekly, one of last week's weekly trading zones, 2813/14. You'll notice here, as price was climbing, we did a leg and a retracement. Now, this wasn't the 50% fib then. This only became the 50% fib when that high was put in. Now, some of you I know are new, and so your fib tool is here. The most recent significant swing low to the most recent significant swing high. 24% retracement, a 38% retracement, a 50% retracement. This is all based on the math of a 13th century mathematician whenever price does a 50% retracement in virtually any time frame, the larger the time frame, the more important and the more significant it becomes. This is a 30-minute chart. So from the low Sunday night to the high put in today, Tuesday, we've now retraced 50%. If you're not familiar with Fibonacci, just Google it, visit a couple of the sites, read up on it. You don't need a 2-year course. I can teach you basically, in 1 or 2 mentoring sessions, I can probably teach you as much as you need to know about it to put it to use as it applies to trading. Now, the golden ratio, as it's called, it exists in all of nature. It's in flowers. It's in our DNA. It's just, it's fascinating, and you should read up on it. But it's not a standalone trading strategy. Okay, you need something else to go with it. Otherwise, it won't end well. So don't spend too much time or too much money learning about fibs, but do learn. If you don't know, then learn. So and when we look at fibs, you know, the biggest question, kind of like with the Elliott wave thing, you know, where do I start counting? Or, well, with fibs, it's either the last leg or the entire picture. Okay, and sometimes that could be difficult because it will change based upon the time frame that you look at. You see this little retracement right here. So you can see actually you can see a leg and a retracement and a leg and a retracement and a leg and a deeper retracement and then a leg and a retracement, a leg and a retracement, a leg and a retracement, and a leg. That's how markets work. Over here, as it was coming down, a leg and a retracement, a leg and a retracement, and then we never got another leg. We didn't put in a lower low. That tells us that the market's getting ready to move higher. Now, okay, so if that be the case, when we went leg, retrace, and did not get another leg, we did not get a lower low, and it began to move sideways, and we start to ask ourselves, is this a delayed retracement, or is this the beginning of a reversal? It's pretty important to know that. Now, what we use, and those of you that are partners are aware, is our indicator set will tell us exactly where the transition takes place. And at that point, we're looking for price to pull away and price to pull back and physically touch the BBC and give us an up close, and then we're ready to buy the open of the next candle plus 1 tick. Other things, of course, would be taken into consideration. Here it's pretty clear when the ball, see over here we were going up, leg and a retracement, a leg and a retracement, and then we didn't get a higher high, so that it ended right there, rolled over and created a leg and a retracement, and then that leg failed, but we were notified right there. Switch gears. Switch gears. Not yet. This move happened pretty quickly. Okay. So I said all that to bring us to this point where we're sitting on top of a 50% retracement, which is also where the market found support as it was climbing this morning right at the London Open. This is the London Open right here. So we had a leg, a retracement, a London Open. It was selling from 3 to 3:30. Then at 3:30 a.m. Eastern, Buyers stepped in. Again, this wasn't the 50% retracement, because that high has to be put in before this can become half the distance to this. So buyers came in, pushed it back up, and what was almost a bearish cross, like this, saved by the bell. And that's why we wait for the cross. We don't, like here, it's very tempting to just, you know, jump ship, set sail, head south. And of course, you can do that. I don't know how it's working for you. If it's working, boy, keep at it. If it's not working, then you might be interested in our humble methodology and how we view the markets. So a very critical point, 50% retracement, most recent swing low held as support right in this area. And if that weren't enough, a weekly trading zone from last week. How does that relate to this week's weekly trading zones? One might wonder. Well, how about this? On Thursday, we'll go over it in great detail. Is that fair enough? There should be a bounce here. That's what is logical. Okay, now the market doesn't always hand you logic, but the logic is simply that so many people do use Fibonacci as part of their trading. Every intraday trader, now long-term investors may not be up to speed on this today, but all intraday traders in the futures market, and even in the equity markets, most likely because they watch the S&P index, understand that since Sunday night, we've gone from this low to this high, and we just pulled back to the 50% retracement. 50% retracement is a high probability area for the market to bounce. Everyone knows that, so what do people do when it hits the 50% retracement? Right, they buy the market. Now, that begs the question, of course, well, is it real or is it a self-fulfilling prophecy? Well, you can never get the right answer by asking the wrong question. So here's my take. The fact that it is a self-fulfilling prophecy or becomes a self-fulfilling prophecy on so many occasions, that is the very thing that makes it real. So which came first, the chicken or the egg? Boy, I couldn't tell you. I just know that I like white meat and scrambled. Okay? Chicken or egg? I don't know. So we can see the bounce. We came down. We hit the 50 at, oh, what was the low of that candle? 28.12. And we bounced up, not a lot. I guess we bounced up to 28.15. This area that last night we said to consider selling, 28.15, which dropped 4 points. And I guess it's done it again. Remember, important prices, important areas are almost always tested. So this is a perfect storm for the market to find support here. Got the 50% fib reason, previously held as support, got that reason, weekly trading zone, got that reason. And if we went out and looked, we could probably find additional reasons. The simple matter of fact is, from the low, 28.12, we bounced up as high, I think, as 28.15 at this point. Will it go higher? Will it turn into something more meaningful? It very well could. This reaction, it's not like we touched the 50 and so there's either quite a contingent of sellers here applying pressure, or the buyers here may not be completely committed to this position. They're holding their ground. I mean, there's volume taking place right now. We don't look at volume a lot, but this number should be changing over here. Yeah, watch the green number as it changes. 63,000 contracts have traded in the last 22 minutes. That changing number is the number of contracts that have traded in this very important candle. Now the previous 30 minutes, as we were coming down into this area, traded 89,000. As you can see, prior to that, it was very quiet. The opening candle this morning, 9:30, right there. The first 30 minutes of trading, we did 147,000 contracts. So the question we have now, it comes down to the 50. We don't prophesy or predict. We just know that because so many people who trade intraday use Fibonacci as some part or element of their trading strategy, that there's an extremely high probability that when price hits a 50% retracement on a time frame, see, it doesn't matter right now if you were on a 5-minute chart or the 30-minute or the hourly, because this is still going to be the Sunday night low, and this is still going to be today's high. And so halfway between the low and the high, it's going to be right here. But I know you understand that. Now let me do this. This is S&P, and we'll put it on 5 minutes because a lot of people watch a 5-minute chart. Now, if you look here on this 5-minute chart, this is another important thing to understand. You see the double bottom? Now, when we were on this chart, we weren't so much thinking double bottom, right? But I did point out that this was where the market found support on the last pullback. And so there is a high probability that just for that reason alone, some buyers will step in, others will step in for the 50, some for both reasons, whatever the case may be. But the person who's only looking at the 5-minute chart won't understand all that we just talked about. If they scrunch their chart up and take themselves back in time to Sunday night. Now here's Sunday night. Okay, that point right there is that point right there. And we have, what do we have there? A triple bottom. So that's proven itself to be a pretty good area of support. Now on the 5-minute, if we draw from the low, just like we did on the 30-minute, to the high, we'll see that price came down and touched the 50 just as it did on the 30-minute chart. The difference between the two is on a 5-minute chart. Remember, we initially were just looking at this part when the chart first came up. Now you're probably saying, well, yeah, but if you squish it up some more, you'll probably find a lower low. Yeah, eventually you will. You'll go back far enough. Now, let's do this. We'll change that 5 minute to an hour. Now going from 30 minutes to an hour, I mean, that's doubling. Okay, it doesn't seem like, 30 minutes, hour. Well, it's double. Now let's do that again. You see that little square? That's on the hourly chart. And there's the 5 minute chart. Really? Yeah. Now, there's the hour again. See that? So, the more time that you look at, right, whether it's on a 5 minute chart or an hourly chart, doesn't matter the time frame of the chart you're on. What matters is the number of consecutive hours, if you will, and or days that you are looking at. Because here we see a low, a significant low on June 28th. And I think, based on the hourly chart, we would all agree that in the grand scheme of things, that's the leg. Leg and a retracement and a leg. Is it made up of all these little legs inside? Yes, that's what we mean when we say that markets are fractal in nature. So from this low to that high, 50% retracements here. Okay. Now, which is more important and which is more significant, the one we're at today or this one? Well, the larger your time frame, it's always going to be dominant, more important, convey more information. The smaller time frame is going to give you the first signal that there is a potential change in trend, but it's also where you'll get more false starts. Now, if we bump this up to a daily, there's our little box right there. Now, we could go all the way back to the beginning of the year when we put in that low. And our 50 is now right here. If price were to drop to the 50% retracement on the daily chart, that would create, in most cases, a much bigger reaction than a 50% retracement on the hourly chart or the 30-minute or the 5-minute. It's a little difficult to kind of wrap your mind around at first, but the more you work with it, and just draw the fibs and draw the fibs and draw the fibs, and just remember that you, based upon the time frame you're observing, you either need to get the whole picture in view or focus in on just the last leg. And for most intraday traders, they will execute on that smaller time frame, working with just the last leg, but not without the greater understanding. And let me show you what I mean by that. Okay, if from here to here, if that's the big picture, right, and we're viewing this as the last leg up, well, we kind of know what happened there from the low. Come on. To the high. We made a 100% retracement from this low. On the week, we're at a 50% retracement. On the session, You look at the time of this low, July 24th, 3 a.m. This session, we're at 100% retracement. On the week, we're at a 50% retracement. Now, the fact that we're at 100% retracement on the session, on the last leg up, that's significant too. That's just one more thing to layer on top of all the other things that we said about this chart here. So the real question is, will this hold? Is 2815 going to hold so that when we come back to look at the chart, what we see is a leg and a retracement, and then another leg. What if buyers do their best and they try, to put in another leg, but they fail? They get up here, and by golly, that's just it. That's going to be the high of the week, and it's not going any higher. Okay. Once you have evidence that there is such a concerted effort underway, when you see the tipping point, okay, that's something that I've written about of late, the importance of being able to sense the tipping point. When you hit that tipping point, you can run with the buyers up until you approach the danger zone, and then you can tighten your stop up real tight and let the market gracefully take you out. Okay, this is a window of opportunity here, but am I going to buy it right now? And there's two ways to look at this. Okay, based on what you have learned in the live training room, we're going to wait for a bearish cross to trade anything short, but that's not what we're discussing. We're talking about going long. So what has to happen in order for us to get a long trade? All right, well, price would need to rise back above the BBC and the CFMA1. Okay, that would make this look a lot like this. You see how it turned red, we came down, and then we didn't cross. Got right to the crux of the apostrophe and turned back up. That important price, important area, 28.15. Now we're back in the same spot. So, two ways to deal with this. Based on everything we just said, you could take a position long, and you only have to risk, if we're generous, I guess right there, maybe too generous. That's about right. So entering here, you don't know if the buyers have enough steam to take it back up. What you're thinking though is, boy, if my goal's a couple points a day, when I see them all, line up for muster, can I hitch a ride to reach my goal? On a 50% retracement that's spread out over price action of a couple days, typically the answer to that's going to be yeah. Okay. The other way of looking at it is you want some real evidence that the buyers are going to pull this off. And even if they don't pull it off, as long as they give it a decent effort, a college try. Now, we don't do pattern recognition. It's not anything that we teach, but those of you that understand head and shoulders, you can probably see this is a shoulder, this is the head, okay? So now if price comes back up to create a top, okay, follow the horizontal cursor across to the right. See, if price comes up into this area and then rolls over, that creates the right shoulder. The neckline is just right, perfect at that 50% retracement. Okay. That's where you would sell on the way down. So to trade this long, the closer you are to the 50, the less you have to risk. The farther you pull away, you're going to have to look for a new place to put your stop loss. In other words, this probably, if it is going back to test the high or further, it probably won't go up in a straight line in one candle or two. Not saying it couldn't. Anything can happen. But probably it won't. So what we'll see is we'll see a leg, maybe taking out this high, a leg, and then a retracement to pull back. Maybe we get a pullback that, oh, so resistance now becomes support. If that happens, resistance becomes support. Remember, we were looking for this to go up, roll over, and then the trigger is still at 28.15, or actually down at the 50% retracement. That's selling it short. What about the long side? Okay, price pulls up through here, it comes back, and 28.19, which was resistance here, if it in fact becomes support over here, well then, as soon as I can get an entry on the other side of the CFMA1, I will trade this up into the high of the session. So, critical point, two trading opportunities, one long, one short. We've mapped them out. We know where we want to be, where we would be willing to take action. Now, is it possible we never develop the right shoulder, that we just continue to drop from here? Absolutely. Okay. Now, if we do drop below the 50, here we spiked it a little bit when it wasn't the 50. Then after it became the 50, we hit it almost to the tick. We got a pretty good bounce up to, what's the high on that candle? Can't get a read on it. 28.1675. So we had like a 4 or 5 point bounce here from the time this hit the 50. Now, could that be all we get? It could be. It will often be a lot more dynamic. So does that make us sad? No. Whether it bounces and goes higher, as an intraday trader, whether it bounces and goes higher or fails to hold and goes lower, doesn't matter to us unless we're actually in a trade at that moment. We want to be patient and let the market show its hand. Okay? Who's going to win this battle? Okay? This isn't a war, this is just a battle. And I don't like using those war, and like I'm going to beat the market today, because, yeah, probably not. Market's got deep pockets, and all that jazz. So I would prefer that you look at your at the market as your business partner, not as your adversary, not as your enemy, but maybe you can play nice. Maybe the two of you can work together to accomplish your goals, whatever those might be. So we need some evidence. If we fall through the 50, then the next logical place to find support would be the 62% retracement. If that doesn't hold, then we're back down to this zone and these lows right here for support. So if it bounces, we can trade it long, reach our goal for the day. If it takes out the 50, the distance between the 50 and the 62. Let's say the 50 fails and the 62 holds. All right. So it looks like the 50's at 28.12, or yeah, 28.12. Down to 28.07, which just happens to be where last night on the Concierge Trade Alert, or no, that was yesterday, we had suggested buying at 28.07. Long before that became a 62. Not because we had some inside information, that's just important prices, important areas. Okay, so see, it's a real battle. I mean, now keep in mind, if the bulls start to get exhausted defending this thing, trying to push it higher, they can just say, you know what, it's not worth the effort, and they step aside. It takes financial commitment for the market to move higher. In order for it to move lower, there's really no financial commitment required. Yes, if you want to sell, you have to commit. But if the buyers in mass just step aside like a school of fish turning left, if the buyers say, you know what, let them have it. We'll pick it up at the 62. Or we'll pick it up at the Sunday night lows. We'll buy it at a cheaper price and have a better shot at running it up. So see, it's not always sellers that hold a market in check. Often it's the buyers themselves. Who doesn't like a better price? And along with that better price comes distance to run. More distance to run. So this is pretty much a half-hearted effort by the buyers. Now, the bounce that we saw, evidence that what I have said about the self-fulfilling prophecy and all these people watching it. However, today the response is muted. What do we got on this new candle? 28,000 contracts. The last one was 72. That's that candle, this candle, and this candle. Alright, so I just want to give you something to think about. You got a trade coming your way this afternoon or when Globex opens, based upon everything that I just covered. And now you should have enough information to be able to at least trade it in sim. Whether you end up with a profitable sim trade or not is not even the point of the exercise. The point of the exercise is for you to learn to spot the tipping point. Obviously, having the indicator set will make that somewhat easier. But once you've looked at it long enough, you pretty much know where those inflection points are going to be. So again, last night on the S&P, we said to consider buying 28.21. Ran up 10 points, 10 S&P points, $50 per point. We never get out at the swing high or swing low because we teach to trail a stop, and if you trail a stop, you'll always leave a little something on the table, as happened here. Now, we also said if the opportunity presents, consider selling 28.15. We dropped to a low here of 28.11, 4 points. And then here we dropped again, and this time not quite 4 points, 3 points. A 3 point and a 4 point drop, it looks like, off the 28.15. On the Dow, last night's email said to consider selling 25080, 41 point drop. It also said to consider buying 25155. The first move was good for 23 Dow points. Got back below the trigger, took off again, 98 points. Now, This was at one point in its lifespan, this 30-minute candle, it was a big red angry candle. See that wick? That wick was once red. It might have even looked to some like it was going to become a bearish engulfing candle. This higher high, it wouldn't be on this one, but over this candle is what I was referring to, this big one. If we had closed down here, that would have made it bearish engulfing over this candle with this one little one in between. My point is, look how close it came to getting back below the trigger again. Once and twice. It was desperately trying. Now it looks like it finally has gotten back below again. 25155. Come on. Yeah. And the bounce so far has taken us up to 25184. So another tick, or another point, 85, there it is. So now we've got a 30-point bounce so far. The email also said to consider selling 25080, and that was a drop of 41 points. Dow pays $5 a point. So this little bounce here so far is 150 per contract. This move here, now because of this pullback, I didn't go up and measure off this high. I measured off this high, because if you're trailing a stop, when this thing pulled back, it's going to stop you out, and you're going to leave some of that 98 on the table. The Russell, last night's email said to consider selling $16.99, and we've dropped all the way to $16.77. That's 22. Now, at the beginning of the show it was 13. Now it's 22. At $50 a point. It's over $1,000 per contract. Now, you've been in a very nice trade and you've enjoyed yourself very much, but you don't want to overstay your welcome, and so you're like, how do I get out of this thing? Just like this. The chart will tell you it's time to leave. Okay. Now, this was a pretty fast move, all right? And so we're not going to have the luxury here unless we go sideways for quite some time. What we like to see is, well, typically what will happen, and eventually this will happen. This will happen at some point. The CFMA1 and the step line will start to walk sideways because price starts to walk sideways. As time elapses, if we go sideways, this will fall, but the typical, I'm going to show you where the exit will be when we have a green candle close above the CFMA1 and the step line. So at this point you would say to yourself, okay, at 22 points, $50 a point, it's over $1,000 per contract. The swing low so far, 1676. How much? This is where you make a decision. You're in charge. You're in a trade. It's been good to you. So now this is, you hear people talk about managing the trade. Our sell signal, typically, let me show you what a typical one looks like. I know you've seen it before, but I'll show you again if I find one here real quick. In fact, we had one that I highlighted. Is that on the S&P? I don't know. I'll just find one here. We need a short trade where it didn't fall so rapidly. Boy, that. I want to give you a good example. If I'm going to give you an example, I might have to do it in reverse. I might have to show it to you on a long trade. Yeah, this is good enough. Here you can see price started to walk sideways. Price gets on the back side. So you're in a long trade. Price gets on the back side of the CFMA1 and the step line. Now, boy, you know, that's the Russells. Let's go somewhere else. Let's take our ball and go somewhere else and play. Let's get rid of all this stuff. Now that I've gone down this road, I feel obligated to show you a good example. I know there was a chart I did the other day. I'm trying to think where I posted that. Oh. Wow. I'll just show you. That'll be easier. Alright, so now we got to spread this thing out so we can actually see it. Now, S&P is approaching a bearish cross. It's like when your car, you know, when you get to the mechanic, it won't make that noise. You know what? We'll use this one. Make it real simple. You're in a short here, okay? Price starts to go sideways. The step line gets on the back side of the CFMA1. You're in a short trade, so the first green close on the back side of the CFMA1 above that step line, right there, that's your exit. Just as we have rules for the entry, we have rules for the exit, and that's your exit on this particular one. Now often the trade does not move in one direction far enough to utilize this, but we of course have other methods for that. And so the next time we're in a mentoring session together or a workshop, feel free to ask. Okay. All right. So Dow already gave us a 30-point bounce, and it's trying to bounce a little more. There's 5 minutes left in the life of this candle that we're on right now. Okay, the Russell. If you're in the Russell trade, and if you're trailing a stop, a good place for that stop right about now would be 1683, 1684. For what reason? Well, the exit signal, what it will look like is price getting on the back side of the CFMA1 and closing green above the step line. So you're sitting here looking at that and you're going, so I could get out at current price 1680, or I can wait and not get out to 1684. Do I want to give back 4 points? Okay, well this is where learning how to trade becomes meaningful, okay? Because you have to make a decision. You know if it pulls up to 1684, you have to exit the position. If a green candle closes, it could, and we could go sideways, but as soon as you have a green close on the other side, on the back side of the CFMA1 and the step line, green close, curtains, okay? So, you know, you can't get out down here anymore at 1676. The best you can do right now is 1680. Do you want to give it the room to hand you a exit signal? Now, it's not all risk, no reward. The purpose in doing that is because you, for whatever reason, believe that this leg has more room to fall. Now, if I look at the zones for this week, I can tell you exactly where. What price are we at? 1676. Yeah, partners, you take a look at the lowest weekly trading zone, and that might have some effect on the decision that you make here. See, all of these, we've done our very best to make it simple. Trading's not easy, but it can be simple. So we have all these different things, or not all these, but you've got your indicator set, you've got the weekly trading zones, you have the benefit of understanding the strategy, and you might also have the Concierge Trade Alerts. So those things all working together and in conjunction. Now see how this is pulled up? Okay. Now just because it pulls up and closes green above the step line, above the MA1, it doesn't mean it's all over. It simply means you're not willing to risk any more than that to find out what the ultimate outcome is. Okay? In order to find out what the ultimate outcome is, you've just got to stay in the trade. So learning how to trade and earning money is one slice of the pie, but another slice is decision making, management, protecting equity. Now we got a candle opening on the back side. Now if this candle closes red, still in the trade. Green? I don't think so. Gotta go. Although it could pull back, I could pull up into the zone, last week's zone, and then catch a leg, right down. Just because you take the exit signal doesn't mean the trade's over. You can't be looking back and being sad and have a frowny face. Got to take it for what it's worth. All right? Okay, so that was some extended explaining. But using all of those things, do you see how it takes what appears to be just random happenstance and changes the picture? So now we draw the fib from the high to the low. A 24% retracement would be right here, 38, and a 50. Now look at where the 50% retracement is based on this high and this low, all this session. Take this 50 and look over here. See that? It was good support. This time, as we approach it from below, will this area be good resistance at a 50% fib retracement? So when you come back and look at the chart later, it looks like this: leg, retracement, leg. know tomorrow, won't we? Okay, crude oil. Last night's email said to consider buying 68.40. 68.40. And the swing high was 69.05. So that's $650 per contract available. Again, if you're trailing a stop, you're not going to get out the swing high or the swing low. You're going to leave a little something on the table. Good karma. Leave it for the next guy. Okay? Important prices, important areas, almost always tested, and so here we come back again. 68.40. Did we dip below it? We did. 68.37. And with our methodology, and this is discretionary trading. So while there's guidelines, it's not like the live training room in the morning where there's hard and fast rules for everything. It's two different styles of trading. Getting a tick below, that resets the stage. So based upon the guidance, could you just go long right now? Well, you could, but I once heard a guy say, never buy a red candle. At the time, I didn't even know what that really meant. Prices come back. It's gotten below the trigger. Okay. So, yes, it would be acceptable to take a long trade here. But most traders want, or I teach most traders, the traders that I teach, I hope that they will learn to be patient and wait for some sign that the market really is going to try and put in another leg to the upside. Leg, retrace, leg. And so what would that evidence look like? Well, it won't look like a red candle. The price could spike down and then come back. It could turn right here. But I need something that I can see. I need to see that the market is attempting. Because if the market's going to attempt to go up and challenge the high at $69 and price is currently at 68.44, well, you know, by 68.60, 68.65, they're trying. Okay, they're trying, but they have obstacles to get through. What obstacles are those? The obstacles the market just created for itself with the pullback. In order for that next leg to come to pass, we got to break through the 24, 38, the 50, the 62. Okay, that was crude. There was no trigger on the short side based on last night's email. And on gold, last night we said to consider buying 1234, and all that caused you was a little heartache, heartbreak, indigestion. It went up $120 per contract, but you were looking for more than that, most likely. 1235.20, yeah. So that's basically what a stop out looks like. Because the most you would risk, if you found a suitable entry based upon our methods, then the most you would risk would be $300. And from 1234, 300 would be 1231, and that's where you've been taken out. So consider that a stop. On the flip side, consider selling 1227. Okay. Price has got to work through here. See how price consolidated at that old zone right there? Big leg, consolidation, and a leg and a retrace and a leg and a retrace and a leg that couldn't put in a new high. So we roll over and go leg, retrace, leg, retrace. See? It's just about being in tune with what the market's doing right now. You know, there's some market setting up in some time frame somewhere all the time if the markets are open. Now, that may not be your style to go chase around and see which market's triggering. You may choose to just simply sit stoically in front of the one market that you enjoy trading and waiting for the next opportunity to come along. Not the next fantasy, not the next great idea or prediction, but the next genuine opportunity. And the market's like holding the door open for you. Come on in. It's the trade you can't resist. Okay. Nope. Nope. Up. All right. One last market to look at real quick. NQ. And then we're way over time today. NQ. Okay. All right, on the NQ, last night's email said to consider buying 74.61. And the swing high was 89.75. So if we call it 27 points. $27 times $20 per point. However, that's what the market made available, 27 points at $20 a point. But that's not how many you effectively took out of the market. You see, this is what the market put on the table. 27 points, $20 a point. It's almost $600. Nice work if you can get it, yeah. But you're not going to get it all. It's when the market comes back and hits your stop loss. That's your number. And also on the NQ, last night's email said to consider selling 73.70, and we've not seen that yet. The alerts remain valid from the time you get them in your inbox until you get the next batch the following day. So all these alerts that we just went over today remain valid until when? Until the alerts come tonight. Okay. So the bounce that we were talking about, it wasn't a rapid reaction, but it's a reaction nonetheless. We bounced up so far to 28.18. 28.18. And the 50% fib was, I think, 28.12. Right in this area. So we bounced 4, 5, 6 points. Okay. So with that, is that an opportunity where you could get your goal for the day for a number of logical reasons, even if in the bigger picture you see that there's a possibility for this to rally up to about 28.19. It could roll over, and as price drops through this neckline here, now there are an awful lot of, there's probably more pattern recognition traders than fib traders, but who knows? Probably the person that's taken the time to learn one has learned the other. I can't say for sure. So in other words, I could get my points going long even though the market is positioning itself potentially for a larger sell-off. Yes, that's true. Now, for the pattern recognition folks who trade the head and shoulders, okay, from the top of the head to the neckline, you measure that distance, and a measured move from the neckline to the head, from the neckline to here, which, boy, that sure looks probable, or possible. See the swing low here? Sunday night? If we got a head and shoulders pattern, and if it triggered on the neckline, that's a whole lot of ifs, right? The textbook, and there actually is a textbook for this, you'll find it in all the technical analysis textbooks. Measured move, right? So it's a pretty good drop from 28.12 down to 27.92. 20 S&P points. I'm not calling for that. I just want you in your mind's eye to see what it looks like. See, on historical charts, it's easy to say, yep, there's a head and shoulders, boom, bang. Well, I could have made a killing on that. Okay? Can't make anything with a historical chart. You have to be able to see it setting up and understand the dynamic. Okay? When it reaches this critical point up here around 28.19, now that's an area, not an exact number. Okay? As it reaches this area, it's decision time. It's either got to make the decision, they head north, back up to try and test the highs, or it gives up the ghost, triggers a neckline, and we get some kind of a move to the downside. Okay. The Dow, the Russell, crude, gold. NQ. Now, here, let's do this. This pullback on the NQ has also put it at a 50% retracement on the 30-minute chart. Okay, now this low and this high are the same on a 5-minute chart. Any chart, a 1-minute chart, a volume chart. You understand that. On July 23rd, the low of the day, the low of the session, is 73.1150, and it doesn't matter what time frame you're in. That's the low of the session. Okay? In this case, it's also the low of the week. Doesn't matter what time frame you're on, it's still the low of the week. And no matter what time frame you're on, high of the week. And an all-time high, too, I believe. So what have we done? Like the S&P, we've done a 50% retracement. Leg, a retracement, and a leg. So is there an opportunity from 74.26 up to 74.36? Yeah, I like that quite a bit. Consider Consider 74.28. To 74.40. Now we'll make it a nice round number. 74.38. video trade idea live. Now, is this a prediction that that will happen? No. It's important to understand that. What it's saying is if price reaches 74.28, I believe it has the ability to go to 74.38. And if I can find a proper entry at 74.28, which allows me to risk the, now on a discretionary trade, we only risk $300 per contract per trade. That's the maximum. It doesn't have to be 300, but that's the maximum. However, if we're talking about 10 points at $20 a point, that's 200 bucks. So the maximum that you could risk on this trade idea, based on our guidelines, the way we do it, would be 200 bucks, 10 points. Never less than 1 to 1. You know, if you've got 2 to 1, 3 to 1, 4 to 1, that's awesome. But just make sure it's never less than 1 to 1, because that's bad math and bad science, and it'll come back to get you. Dig it? Okay. Good word for the day. Now, we talked the last couple of days about Jairus. We'll talk about him again today. Luke chapter 8, verses 55 and 56. Her spirit returned, and she arose, and her parents were astonished. You can do your very best for your children and still stand where Jairus stood. You can love them, protect them, and pray for them, and still find yourself in an emergency ward at midnight or a drug rehab clinic during visitors' hours, choosing between two voices. One is despair, the other is disbelief, or belief. Who would have faulted Jairus for giving up? When he first went to Jesus, his daughter was critically ill but still alive. Then, while he was talking to Jesus, a messenger showed up, Luke 8:49, and said, "Your daughter's dead." In that moment, Jesus looked at Jairus and said, "Don't be afraid. Just have faith, and she will be healed." Luke 8:50. Whether stopping the child's sickness in its tracks or raising her from the dead, Jesus was the answer to Jairus' problem. He's also the answer to your problem, to my problem, to our family problems, to all problems. Now, in this case, notice two things Jesus did. He dismissed those who mourned but had no faith. Check out Luke 8:51. Be careful who you let get close to you, especially in times of crisis. And then number two, Jesus united the parents in faith. When Jesus went to the house, he let only Peter, John, James, and the girl's father and mother go inside with him. Luke 8:51. At that point, he took her by the hand and called, saying, "Little girl, arise." Her spirit returned, and she arose immediately. Her parents were astonished. Luke 8:54. When you pray and put your faith in Christ, he can do things in your family, in your life, in the lives of your children, in this world in which we live. He can do things that will absolutely amaze you. And that's our good word for the day. Thanks so much for tuning in today. Whoever you are, wherever you are. May God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.